What is up for everyone on the YouTube replay? I hope you're having a great Sunday. We're going to be looking at some stocks to potentially buy this week. I'm almost certainly going to be buying more of this one company in my Roth IRA. And for y'all on the replay, skip about 20 minutes in because that's when it turns 8 o'clock and that's when the market opens. That's when we'll really give a real stock portfolio update. But let me start this off by going over the stock I'm planning on buying more of in my Roth IRA. Well, it's actually two companies, but the first one is a bit of a more safe play. It's a healthcare play. If you don't really have any exposure to healthcare, this is my favorite healthcare play of all time. It's ticker symbol HCA. This is HCA Healthcare. I'm only up 1.57% on this company. But let me tell you why I think this stock is a steal of a deal. Look at this valuation, first of all. The current PE is an 18, but the forward PE is a 15.9. That means there's a lot of growth expected for their net income, but check out what they reported this quarter. It was a great quarter. Analysts expected 18.5 billion. They reported 19.1. So they beat on revenue. They beat on their EPS, of course, too. They expected 570. They did 696. This was an incredible monster beat. And same with their EBIT, just basic, non-adjusted, like there could be a little one-time adjustment to their EPS, but not like earnings before interest. I mean, that was a massive beat. So if we look at their revenue, the revenue grew 9.5. So the revenue's up 9.5 and the net income is up by 28. So what does that mean in English? Basically, it means there's margin expansion. The net margins grew by 17% year over year. But check this out. So they're easily making like 1.8, 1.9 billion of net income a quarter. The free cash flow is even more. If we go up here to the FCF, they're making like over 2 billion of free cash flow a quarter as well. But they're making 2 billion of net income a quarter. They pay a dividend. That dividend at the top only cost 166 million. One of the safest plays out there. Notice the cost of the dividends going down because they're doing share buybacks. Since the dividend costs so little, this company is literally spending 2 to 2.5 billion of their net income a quarter on share buybacks since they have so much leftover money. So this is one of my favorite plays, beating on all expectations. I think they certainly deserve a higher forward PE of a 15.9. I believe this has the ability to stretch up to like an 18 or a 19 forward PE, send this up another 30%. They can afford to literally 5x the dividend right now. They just choose not to. So yeah, you get a 0.6% dividend yield, save 12% payout ratio, and you should get a lot of stock price appreciation via the buyback. So yeah, that's one of the first stocks I'm going to buy more of in my Roth IRA. I do own that one, so I might be biased, but yeah, I'm only up 1.5%. I'm really trying to build out my quantity of shares here. So that's one of the first stocks I'm looking to buy. Hey, what up, Aaron? We'll look at LDOS after this. Louise, what's up, y'all? What's up, Josh? We'll look at SoFi too and Cardinal Health. So the other stock I want to actually buy is Weeble, a bit of a growthier name. This is a brokerage. It's kind of like Robinhood. It's this app right here, publicly traded. I have a Weeble account. I've been using Weeble for many, many years. Let me show you my portfolio real quick, and I'll show you why I'm so bullish on them as a platform. Hopefully no one saw my password there, but dang, this thing really doesn't want to load me in. Okay. And I'll just have to reset the app because maybe it's because I'm screencasting. It doesn't want to log me in because it has a detection. Well, oh, there we go. Okay, so yeah, here's my Weeble portfolio. We're only up 19% all time in here, but they've added a lot of cool features. Like check this out right here. If we head over to the most recent features, they actually added in crypto. It says new next to crypto because they just added in crypto, and they also added in this prediction market stuff, and that's what's made a Robinhood stock go up so much. So it's kind of like a smaller version of Robinhood. So it's like the picks and shovels play. Whenever someone does a prediction market contract, they keep 2% of the transaction. Whenever you buy a stock, they only keep 0.1%. So these prediction market contracts are 20 times more valuable than a stock transaction. Also, crypto transactions and margin all make them a lot of money. And so yeah, if we look at Robinhood, the reason Robinhood stock is decoupled from Bitcoin, because it used to follow Bitcoin, is because of the prediction market and Robinhood Gold. It was so successful. Robinhood's literally copying the successful business model. You can buy Weeble Premium too. I don't pay for that, but it's just like Robinhood Gold, where if you give them a couple, they give you a higher percent APY. But anyway, yo, shout out to my homie friend Louise on the YouTube stream. He just became a member. I really do appreciate that, Louise. If you got a stock you want me to look at, let me know there. I greatly appreciate that, my friend. Hope you're having a great Sunday. So Aaron said ticker symbol LDOS. Then we'll get to SoFi because SoFi is kind of like a Weeble. But yeah, that's kind of my thesis behind Weeble on top. I didn't even get to the Weeble financials, but they're really good. Um, so if anyone wants me to go in more depth on Weeble, I'll do that. But here's Leidos right here. I'm actually not too sure what this company does, but the stock is done fantastic and they're pretty much at a new all-time high. So if you've ever bought this stock, you got to be up on your money and check out the forward PE. It's a 17. That implies to me that even though the stock is at all-time highs, it might even be able to go up higher because a 17 forward PE isn't really nuts. So they're in national and digital security. Look at that. It's kind of growing single digits. That might be why they're in a teen multiple, but revenue's up 8% after it grew 0.7. So at least it's growing. I like how diversified that they are. So national security and digital, health and civil revenue, that's up 6% year over year. I like that it's growing. Defense systems, how's that growing? That's up double digits, 11.5% year over year after 13% growth, and also commercial. So I like how they have all these different streams of revenue. This quarter was a really big beat. That's probably why they gapped up on earnings. Yeah, because look at this. They reported earnings. The analyst expected 4.28. They did 4.46. They expected 256. They did 280 of EPS, and they beat on EBIT. So they triple beat. They beat on every metric. But I can still see why this company is trading at like a teen multiple, because if you look at the revenue growth, it's single digits, 6%, 3%, 6%, it's not double digit top line growth, but they print a lot of net income. If we go look at their bottom line, they're easily making every single quarter, like 350 to 400 million of after-tax net income. I am all in on Leidos this week. Hey, what up, King Louie? Yeah, check out the bottom line right here. They're easily making 300 plus million of after-tax net income, after they pay 150 million taxes. So honestly, there could be more upside at a 17 PE. They're beating on expectations, kind of single-digit growth, but they print a lot of net income. They pay a dividend, a 0.8% dividend safe payout ratio. So it's a cheap company. I can see why they're doing so good because they beat so great on expectations. So let's go to SoFi. Yeah, let's do SoFi real quick. And hey, what up, Celery? I added more shares of Grab on Friday. Hey, nice. Let's look at Grab. Actually, that's a great company. It's like an international Uber play. So here's SoFi Technologies. Is another growth kind of fintech app. So I also own this stock, so full bias. But here's why this stock has done so well. It's not just done well because of momentum. It's done well because the fundamentals have improved so much. And yeah, Josh, we'll get to Cardinal Health too. But here's the great news about SoFi, why they're like a pure growth company. If we go to their financial services revenue right here, this is the growth you want to see. And this is what justifies the high multiple. The revenue grew 76% year over year, after grew 101, after grew 140, after grew 280. Like it literally hits a new record every year, every quarter. No analyst expected that. And we could see the analyst expectations down here on the orange line. They triple beat every quarter. They beat on revenue, they beat on EPS and on EBIT. So that's why I really think people are taking SoFi serious. They actually have great numbers. They make over 100 mil of after-tax net income a quarter. Revenue just hits a new record every quarter. So SoFi is a great growth company, but they're expensive at a 46 forward PE. They certainly deserve a high multiple, but it's really hard to allocate like new money into SoFi at their current prices. But it's definitely one you want to put on your watch list just because they're so quality. So let's get to Grab, and then we'll get to Cardinal Health. Sorry, I'm a little behind here. So yeah, Grab, this is literally international Uber, and that's what I love about this stock right here. We know this commodity is universally needed. Ubers around the world. Especially in other countries because for tourists, because the local people always try to scam you, so you just get a Grab over there. But look at where their revenue comes from. They do exactly what Uber does, ride sharing and deliveries. So their top countries are Malaysia, Indonesia, Singapore, Philippines, Thailand, Vietnam. Notice the US and Canada aren't on here. So it's a pure international play. And the best part is Uber decided to back them. If we go to the largest shareholders down here, Uber literally owns 13% of the entire company. So Uber is the largest shareholder. Also, a Toyota Motor likes them. Toyota owns 5.5% of all the shares, and they're finally net income positive. Check this out. They've made 10 to 20 mil in net income every quarter. And this is great news because if we look at the same time last year, they were losing sometimes like 100 mil a quarter, but they've narrowed the losses so significantly. Now they're making net income. They have no net debt. Look at these expectations. Like revenue is going to hit nearly $1 billion. So anyway, yeah, EPS is up and to the right, supposed to double, more than double actually. EBIT's supposed to. So anyway, everything here's headed in the right direction. I actually really like Grab. International Uber play there. 60 forward PE, but you really do like a 2 or 3 year out PE multiple because they just got net income positive. So here's Cardinal Health. Thanks again for the rose there, Josh. I appreciate that. What is this site that you use? Hey, this is actually a brokerage right here. If you want to get it, it's in the link tree in my bio. Very first link there, broker where you buy stocks on. It is an affiliate link, so if you go and like deposit $100, we'll both get like some free stocks. But yeah, you just type it into Google, brokerage called Moomoo. But here's Cardinal Health right here. They're at a 28 forward PE. They run at a very low margin, but they print a lot of money. If we go to this company's net margin down here, look at this. They're lucky to have a 1% net margin, but all they need is a 0.7% margin to make 450 million in net income. So the top line is they did 64 billion in revenue, and on the 64 billion, they netted 450 mil, but they still make a lot of net income every quarter, easily 4 to 500 mil of after-tax net income. You get a 1% dividend, even though this stock is at an all-time high. If you buy it now, it's pretty close to an all-time high. You still get a 1% dividend. And the valuation's fair. This forward PE is a 28, so they're still expected to grow their net income by like 10%. So they're pharmaceutical and specialty solutions. So it's an interesting one. And the expectations are actually really good too. Yeah, EPS is up and to the right. Same with the EBIT. So yeah, there's Cardinal Health for you. Bit of a leveraged balance sheet, but I think they'll be okay. Yeah, interesting stock here. Let's check out this one, SKYT. What is this one? SKYT. What up, Celebrate? Skywater Technology. What do you think about Bank of America? Bank of America. We'll check that one out too. I'm so behind here. XCRS. Hey, what up, Red or Green? I want to get to all these stocks here. Sorry if I'm a little behind. I know we got Bank of America reporting next week. So Bank of America earnings might move JP Morgan. So here's Skywater Technologies. This company is at an all-time high. So yeah, King Louis says, love how you talk about financials. Yes, sir. We try to deep dive into the fundamentals because that's what moves the stock in the long run and sustains momentum. That's what really moves the stock and is the reason stocks gap up or gap down. So anyway, Skywater Technology, they're a $1.4 billion market cap. So a very small company, and they do wafer services. So wafer services revenue. Check out the expectations here. This is probably why the stock's at all-time highs, pricing in this future growth. The revenue is going to go from 61 million to 147 million, and they beat this quarter. Analysts expected 135, and they reported 150. So big B, yeah, they were expected to lose basically money, the earnings before interest. They're expected to lose 2 million. They made 13 million. So that this most recent quarter specifically, I can see why they've done so well. I wonder if they did some sort of acquisition. We see how their balance sheet just kind of gapped up from the previous quarter. If we go to their cash and investing activities, yeah, so they did just buy a company basically. But anyway, there's a lot of future growth, I guess, that's priced into this stock. Anyway, it's an interesting one. They do wafer services, or I guess that just gapped up maybe from the acquisition. Yeah, the revenue was 5 million last quarter. Now it's 92 mil. So interesting one you want to watch there as they really move through that acquisition. I'd be careful buying that one at all-time highs. Let me get to Bank of America. So this is a bank. Actually, Warren Buffett owns this one. Let me double check actually, because it's so easy to see. We can see the Warren Buffett holdings right here. His largest holding is Apple, American Express, and then it's Bank of America. Bank of America is 10% of his portfolio, and it's at an all-time high. Check that out. So if you've ever bought this stock, you're definitely up on your money. And on top of the stock price appreciation, you've gotten a 2% dividend yield, and the dividend's very safe at 31% payout ratio. These banks usually trade at like a 12 or 15 PE. So yeah, the forward PE is a 13. That's right in line of what a bank should trade at. So yeah, consumer banking, global and wealth management. Let's see how that's doing. So whenever they manage assets, they take a 0. whatever percent fee, and it's all high margin. So I like how that's at a record, 6.3 billion. It's never been higher before. Global banking, global markets. So anyway, yeah, they beat this quarter by a lot. They beat on revenue, beat on EPS by a good chunk, and on EBIT. So they had a triple beat quarter. These banks usually just print money. Yeah, look at that. Bank of America makes easily 7 to 8 billion of after-tax net income a quarter. So yeah, Bank of America. If I own this one, I wouldn't really trim or sell out of that one. And on Monday or Tuesday, I believe actually Tuesday, we get JP Morgan's earnings. JP Morgan's been a bit more growthy, but this one's at all-time high. Same with Goldman Sachs. They're all doing good. Is AMD a good time to buy? I don't think AMD is the best buy currently. Actually, I think Nvidia might. And AMD is a little expensive. We'll look at SKY after this. How's it going, Jeff Mack? Hope you're having a great Sunday. So here's a bit of a more growthier chip name. I've always liked this one more than Nvidia because if we look at the market cap in the top right, AMD is worth $330 billion. If we go look at Nvidia right here in the top right, Nvidia is worth $4.5 trillion. So for you to double your money buying Nvidia shares, they got to be worth, $9 trillion. So I thought it was an easier double on AMD. And again, I do own AMD right here. We're up 63% on my position. We bought them down here a little. We didn't even time the bottom. We didn't even time the bottom by like 40%. We missed it by, but AMD just had such a great deal with OpenAI right here. The stock gapped up. I wonder if there's any news recently around AMD. There probably is, but they're still a little expensive. Like if we go to the forward PE, it's a 59. So a 59 forward PE is a little expensive. Let's see. AMD CEO highlights physical AI. AMD launches Ryzen AI embedded processors for automotive applications. So maybe self-driving cars can use their chips or something like that. AMD gains market share in gaming processors. Okay, well, anyway, yeah, they're at a 59 forward PE. Well, this is still great because the current PE is 100. It's EPS is supposed to grow 40%, to a 40 or 59 forward PE. That's a great forward PE considering its current PE. They're a big data center play. The data center revenues had a record of 22% after it grew 122%. So they're just continuing that growth. That's great. Their client and gaming revenue is up 72% year over year. So they had a great earnings beat. This is why they certainly deserve a high multiple. The analyst expected 8.75. They did 9.25. So they beat on revenue. They beat on EPS. Oops, my thing is glitching out there, and they beat on EBIT. So it's a triple B quarter, and the AMD has a phenomenal balance sheet, no net debt down here. So anyway, for those reasons, I really like AMD. They make good net income. They're growing top line. They're growing free cash flow as well. I think, yeah, record free cash flow, $2 billion of free cash flow this quarter. It was great. So I do want AMD. The risk, you do eventually probably want to get into that one, but it could potentially even go lower because they say an 80 forward P. It could potentially fall maybe another 10-15%. That would be like a golden zone to buy in. So again, I'm so behind on stocks here. I do apologize. Futures are blood red. Oh no, hey, the market just opened. I was waiting to do a portfolio update till the market opened. After we check out ticker symbol SKY, we'll go see how the market opens. So this is Champion Homes right here. Let's check it out. This is Jeff Mack. Shout out to the member. Champion Homes. They're at a 24 forward PE, a 5.3 bill market cap. That's the exact same as Cavco. U.S. factory built housing. So they do exactly what Cavco does. The revenue's up 10% year over year. After grew 38. So that's great growth. They had a great beat on expectations. They expected 636. They did 684. Beat on revenue, beat on EPS. So that forward PE is using these orange numbers. They always beat by a good chunk. They had massive beats these past 2 quarters. So well, I'm guessing a 9. So yeah, 9% net margin over here. They're making 40 to 60 mil of net income a quarter. Great balance sheet as well. Looks like no debt at all. No debt at all. $618 million of cash. This reminds me exactly of Cavco. That's crazy. So yeah, they actually have so much cash that they're earning $6 million of interest on their cash a quarter. So very interesting name here. Ticker symbol SKY. I'll actually put them on my watch list. So they Champion Homes. Maybe we can check out their website right here. Let's see. I want to see some of the, here's their investor presentation. I love investor presentations right here. Oh, so they make houses like this. Those look beautiful. Let me get to the financials here. Here's kind of some cool metrics here. Anyway, they're really cool. Actually, I'm going to put them on my watch list right here. Is this the market share? HUD Homes. Anyway, they're actually a pretty cool one. I'm actually glad you told me about that. They remind me exactly of Cavco. If you like that one, Jeff Mack, you'd also like CVCO. Let me go see how the market's open. Yeah, CVCO does the exact same thing. We just bought them. So let's see. Someone said futures are blood red. Let's hope not. So let's see right here. So yeah, the QQQ is down 0.6% right now. I thought Google would be green. Google had a lot of interesting partnerships happen over the weekend, like with Walmart. Let's see. Is anything up or down over here? So yeah, SoFi's down 2%. AMD's down 0.6. PSIX is down 3%. Not the end of the world. We'll come back to this because there's basically no volume yet. Market's been open for 3 minutes. And there's never that much volume in the overnight market. So yeah, that was a cool one. Um, can we look at SanDisk and Micron? Hey, these are basically the same company. Let's look at SanDisk actually. So SanDisk and Micron, these are your memory shortage plays. There's a huge shortage in memory happening right now, and it's printing these companies a lot of money. Actually, let me pull up Micron as well. I like Micron slightly more. I don't know why, but yeah, both of these are at literally an all-time high. They hit an all-time high on Friday. And here's why I think these stocks are going to continue to climb higher. I think there's probably another 20-30% upside, not financial advice here. But the forward PE is an 8.9, and that's real. They're really trading at only 9 times next year's net income. Check out the EPS growth projections. It's crazy. EPS is supposed to go to $8 next quarter and then $9.50. Literally, it's going to go from $1.60 to $9.50. That's basically 1,000% growth. That's what's crazy about Micron. Again, pure memory play. And this memory shortage, the spiking memory prices are tanking Nintendo stock right now. That's what they're blaming it on. So it's almost like an inverse to Micron. Like as Micron goes up, Nintendo's been going down. So anyway, yeah, I think they're both, honestly, I wouldn't call anyone crazy. I wouldn't buy, I'd buy a super small amount if I had to, but I would expect this one to probably still, years come, like be up another 20-30%. Like I wouldn't be shocked. Like those are the kind of stocks that just continue to climb higher and higher. Those are really good forecast numbers. So where's my forks at WDC? Hey, and then there's HIMS. HIMS is a tough one. And RDW or Young said, what news platform do you use? Or I just use this brokerage right here. If you want to get this app I'm on, it's in the link tree in my bio, very first link there. So here's Western Digital. This one also is done crazy. Is this a memory play? I don't know. The forward PE, see, that's the crazy part. Even though this stock is at a crazy new all-time high, the forward PE is a 24. Let's see what they're projecting. But yeah, the current PE is a 29 and the forward PE is a 24. That's like this, in my opinion, has the ability to stretch up to like a 28, 29 PE before it really maxes out. And that could be another 20-30%. But yeah, look at these EPS projections. EPS is supposed to go from $1 to $1.80, but they consistently beat on EPS. Let me look at the EBIT because there's probably a one-time adjustment this quarter to their net income. Yeah, so they didn't make 1.18 billion, but they really did make 800 million, which was a 133% increase in the bottom line. And the top line grew 27. So there's just pure margin expansion happening here. Gross margins are up 20% after it grew 900%. So no wonder this stock has rocketed up in this year's time because the fundamentals have dramatically improved in a way that's beating expectations as well. EBIT, basically earnings before interest, is supposed to go from 550 to 930. That's insane. So that's why this stock is probably just going to continue to climb higher as well. It's really good. Okay, let's see. Actually, let me get to JFIN right here. JFIN. I'm kind of a little out of order here, but I want to get to all these stocks here. We're going to be live for another hour. Easily, we're going to be live over for another hour. So I'll definitely get to everyone's stocks. So here's Giant Group. They're a very small one, so be careful. If you look in the top right, they're only worth $369 million. And they're a Chinese company, so we'll convert the currency to USD just to get a little bit of a better idea here. We don't really cover these kind of stocks, but revenue from loan facilitation services. So some sort of Chinese lending company. They probably are profitable. Let's see. So yeah, this is the good news here. You go to the net income, and this is in US dollars. We've converted it. They're easily making like 40 to 70 million of net income a quarter. So that is good news. You just got to be careful with Chinese companies. So their PE ratios are 1.4, trading at basically 1.5 times net income. That's extremely cheap. Out of all the Chinese companies, we're 369 million. This one's good because they really are making good net income every quarter. I'd buy this one. But yeah, I'd maybe risk it, like, or keep a little bit amount. The fundamentals are there. Like, this is Chinese, and like they really do have good financials. Hey, what up, Moses and Viv? How are y'all doing? Hope y'all having a great Sunday. And Tui, how's it going? Someone said ASTS and Taiwan Semi. Ooh, Taiwan Semi. Let's do it. Oh yeah, sadly we gotta get to hymns and QBTS, Adrian, the legends here. So yeah, here's ASTS Space Mobile. This is another one where the financials and the expectations of the future explain why this stock is at an all-time high. It's always the numbers. So if we go to this company's revenue expectations, or just to put this in context, let me get some water here. They just made revenue for the first time ever. They made 14 million this quarter. All the previous quarters, they only made like $1 million a quarter. But look at this. They made 14 million this quarter, a record. Check out what analysts are expecting next quarter. 39 million of revenue next quarter, and then 34 million the quarter after. So this is basically what's happening. The company's going from a company making $1 million a quarter to now 40 million a quarter. That's 120 million a year annualized. So the whole business is changing. So we don't want to see them miss these expectations, because they did miss on expectations slightly this quarter. But there's just a lot of momentum right now around these space names. I wonder, let's see if there's any news down here. Scotia downgrades AST Space Mobile over delays, competition, and high cost. That's not good. The company requires 50 satellites for continued service, which may not be achieved till 2027. Free cash flows projected only by 2028, so they're not supposed to be profitable until 2028. But Bank of America holds a $100 price target on this company. Oh, it's $96 today. Anywho, it's an interesting one because of that crazy revenue expectation, but I keep the allocation of this one low. But I can see why that one's interesting. Ooh, what did I want to look at here? Let me do RDW. I'm behind and I apologize. So here's Red Wire, and then we'll go see how the market's moving, because we're finally getting some volume come into the overnight market. Well, spoilers, it doesn't look too good. Looks like SoFi's down 2%. We'll go look at the Robinhood portfolio in a minute here. Oh, actually, look, McDonald's, CEG screen, United Rentals. But the Qs are, QQQ is down 0.6, Nvidia's down 0.5%. Really not that bad. Really nothing too crazy right now. So let's get back to the analysis here. So Redwire, I don't know what this company does, but they're only worth $1.8 billion. So a pretty small market cap here. But they spell Space and Defense Technology Solutions. They actually just had a record revenue quarter. Check this out. The revenue's $103 million. It's never even been close to that a single quarter before today. So they just had a record quarter, but it looks like it missed on expectations. That might be why the stock is flat from a couple years, or from 3-4 quarters ago, because for the past 3 and 4 quarters, they've missed on every metric. They missed on revenue, missed on EPS, and on EBIT. So yeah, they really was a triple miss, but it's still like, if we zoom out in the grand scheme of things, like, this is still a great quarter, 100 mil of revenue. Did they do an acquisition for this? Oh, so that might explain it. Check this out. 2 quarters ago, we saw the balance sheet dramatically change. Why did it go up so much? Because 2 quarters ago, the exact quarter, as the balance sheet went up, if we go to the cash from investing activities, you want this to be negative, because that means, they just bought an asset. They spend a bunch of money buying a company. So that's probably why the revenue grew so much. It was inorganic growth, but still growth nonetheless. But it looks like they're missing on revenue targets from the acquisition. I don't know. We just want to see them start to beat these expectations. They probably haven't moved for a year, 4 quarters, because they've missed on every quarter. That would be my guess. But still an interesting name there. Okay. Gold and silver going up. Hey, nice. Buy long at USD/Brazilian. Hey, interesting. What up, Real Talk? My favorite Brazilian stock, if I just random thought here, is ticker symbol NU. 93% of the revenue comes from Brazil. This is a crypto bank out of Brazil that literally prints money. I put this one on your watch list. They're cheap too. They make 500 to 700 mil in net income. This net income's up 42%, after grew 82, after grew 300%. And the forward PE is only a 21. The current PE is expensive, 34, but the forward PE is a 21. So you're not paying much for growth, and the EPS expectations are up and to the right. So NU is one of my favorite Brazilian stocks, where most of the revenue comes from Brazil. Ooh, hey. Ooh, no way. Um, Let me get to CommScope, and then we'll get to Taiwan Semi. Taiwan Semi is a steal. It's Taiwan Semi next for sure. Sorry. So here's CommScope. The reason this stock gapped up on this day is because they agreed to sell their biggest business to Amphenol, and I own that company. But basically, this company, if we look at their current balance sheet, they're highly leveraged, more liabilities than assets by a lot. But guess what? All this debt, all these liabilities are going away. They sold off their business to Amphenol. In exchange, they took away all their debt, but they also sold Amphenol this connectivity and cable solutions business, which they actually agreed to do that back here. In this business has crushed earnings. It's up 51% year over year to $1 billion. It's never been over $1 billion before. Last quarter was up 20%. So this business right here is going to Amphenol. And so this will no longer be under them, but they basically sold them this super growthy business in exchange for also taking off all their debt. So that is going to Amphenol. And that's actually what I'm so bullish about. Amphenol stock. Ticker symbol APH. I do own this one, but that acquisition, I believe, is going to be even more accretive to the EPS. It was already accretive when Amphenol bought them to the EPS, but I believe it's going to be even more EPS accretive to Amphenol's EPS, and that's why I think Amphenol is going even higher. But yeah, anyway, they're in a good kind of reset position where they have no debt at all, and their other businesses right here, let's see, they also they're keeping this. Like, this business grew 77% year over year. That's great. And their Ruckus business grew 15%. So anyway, there's CommScope for you. So let's do Taiwan Semi. Ooh, Chipotle. Hey, we'll look at Chipotle too. That one's had a nice little recovery from the bottom. One of the better restaurant plays. And Louise, if you got another stock you want me to look at, let me know there. Thanks again. So here's Taiwan Semiconductor. If I was a shareholder of this one, I wouldn't be selling this one because I believe it's just going to continue to climb higher. If you didn't know, Nvidia just designs the chips. Taiwan Semiconductor actually manufactures them. And that's part of Nvidia's moat. They have an incredible backlog. Their capacities are always completely full, and they actually just completed, this was like a couple months ago, their first ever Blackwell chip in their Phoenix, Arizona fab. Because one of the big concerns about Taiwan Semi is, they're 6 feet away from China in Taiwan, their main manufacturing plant, but they now have one in Phoenix, Arizona that's growing. But if we just judge this one off their numbers, this stock is a beast. One of the best I've ever seen. The revenue is up 35% after it grew 42. So that's a crazy streak of growth. So the revenue, look at the revenue though, it's 32 billion, and this is in USD. We've converted it from Taiwan currency to USD. So this is in US dollars. It's 32 billion of revenue, and on that 32 billion, they netted 14.8 billion. So that means their net margin is a 45%. They made 14.8 billion after they paid like 3 billion of taxes. Like that, they really did net this with a 45% net margin, and they have a crazy dividend. Like, it's kind of like a higher yielding Nvidia. You get a 0.9% dividend. They raise it dramatically every year, faster than inflation, and all that growth, all these crazy good financials for only a 26 forward PE. That implies to me this has the ability to stretch up to a 28, 29 forward PE and continue to send the stock higher, believe it or not. I would not be trimming or selling out of Taiwan Semi. They're so high quality. What happens is, hey, this is a brokerage right here. If you wanted to get it, it's actually in the link tree in my bio, very first link there, broker called Moomoo. It is an affiliate link, full disclosure, so if you go and deposit $100, we'll both get some free stocks. All these brokerages are all in the link tree in my bio as well. Like Robinhood's the second link in the link tree in my bio. They're all brokerages. Yeah, so the futures are not looking too green right now. Google's, it's really not too bad. It is a whole page of red here. Qs are down 0.5%, Nvidia's down 0.5%. Yeah, not too bad. Usually things change by the market open. Amphenol's green though, it looks like. I wonder how Procter and Gamble's doing. Yeah, hey, what up, Kaden? Good to see you. Okay, let's look at Chipotle. This is one of the better restaurants. If you're gonna buy the dip on a restaurant, I Chipotle was one of the better buys. Like I'd kind of stay away from like a sweet green, a kava. Like here's sweet green stock. They're kind of like a smaller version of Chipotle. Um, Chipotle's the most quality one, but they're still facing issues. Like there's still a good reason why there's still a good chunk off all-time highs. So they're not exactly cheap right now. The forward PE is a where was this? The PE ratio. So their forward PE is a 34. They certainly deserve a good multiple though. So they're at 35 forward PE, not super cheap. So I wouldn't buy it really at this current price, but oh, but here's a cool metric. Their number of stores, they have 3.92 thousand number of stores, up from 3.62. So a good increase from this exact same time last year. And if we go to their net income, this is the impressive part. They're easily making 3 to 400 million of after-tax net income every quarter. This is really good net income Chipotle's making. But do notice the net income's down 1% year over year, while the sales increased by 7.5. So the revenue's up 7.5, net income's down by 2%. What does that mean in English? That means margins are going down. Their net margin fell by 8.2% year over year. Gross margins are down by 4. And it's not just like they're the best position because they still make 3 to 400 mil in net income a quarter. You know who's getting crushed by this? Obviously, we just looked at Sweet Green, but like just a boring Wendy's. It's so sad, but like look at Wendy's. They're at an all-time low, basically lower than they were in 1997, and like a Jack in the Box as well. So I think in McDonald's, a Chipotle, those are the two best names to buy out there. Yum Brands, yeah, Jack in the Box, same price as they were in 2006. What app do you use to do research? Yeah, hey, this app right here is all the one I do research on. It's in the link tree in my bio, very first link there. It's actually a brokerage called Moomoo. My favorite app, it's free. So FIX or MELI. Ooh, MELI, Mercado Libre. This is known as like the international Amazon or like a Latin America Amazon. And they have very impressive financials, actually. Let's see, is there any news down here? Nope, no news around this one, but the forward PE is a 44. So they're expensive on a forward PE, but that's actually the cheapest they ever been. I was actually just doing a research report. Like they're actually the cheapest price they've ever been on a PE ratio. But yeah, check this out right here. If we go to where the revenue comes from, okay, it's more like a South America Amazon. So look at that. Brazil is 55% of the revenue. Then Mexico is another 23. Argentina is 18%. But here's what they do. They're in commerce services, financial services, credit revenues, and commerce product sales. So let's see how that's growing and are they beating on expectations? So yeah, they did beat. Revenue is going to go from 5.9 to 7.9. So there's a lot of growth still expected. And here's their bottom line. They're easily making call it 500 million of after-tax net income a quarter. So that's a great bottom line. Revenue is up 39%. How are the profits? So revenue is up 39. I want to see the operating profit because they had a little one-time adjustment, I'm assuming, to their net income. Guess we'll see here if the margins really did fall. Dang, there we go. Okay, so the operating profit's up 29. So their margins did go down a little bit. Yeah, gross margins fell by 6% and net margins fell a little bit as well. But anywho, yeah, it's like an international Amazon. Total payment volume, number of items sold are 635 million. So interesting one there. Best moonshot stocks. In today's, there's not many of them. All the ones I thought were moonshots have already like moonshotted. I don't know. Yeah, nothing looks great right now. PSIX is decent. Actually, I really like PSIX. They're only worth like 1.4 bill. Yeah, I don't know. How's the overnight market doing? Lightpath is another interesting one, but AbbVie's green. That's good. Okay. What was the other one? Hims. Okay, so Hims, I have sadly nothing too good to say about this one because here's kind of the story around this one recently. So we all know Ozempic, Wegovy. They actually used to be sold on Hims and Hers website. Let me back out of this. I just realized the thing. My Wi-Fi is extra slow today, so that's great. So if you wanted the follow button, we stream every day. We already did a 3-hour stream earlier today. This is our second stream of the day. I'm enjoying these, but dang, this thing really doesn't want to load. Okay, there we go. Here's him. So there is some bad news. Let's see. Hims and Hers faces multiple price target reductions amid valuation and growth concerns. So they're actually cutting prices on their weight loss prescription. So they used to sell Ozempic and Wegovy on their website, but then Novo Nordisk ended that partnership with them. And now, as of literally a couple of days ago, you can find Wegovy on Amazon. So Amazon is now a competitor to Hims and Hers. And if we look at this company's valuation, the forward PE is a 58 and the current PE is a 59. So there's not really much, basically 0% net income growth expected for the next year. And their margins have collapsed this quarter because they no longer sell the high margin weight loss products on the website. They go with some other company. So if we look at the margins, gross margins are down 7 after they fell 5. Net margins are down 90%. So the revenue's growing. The revenue's great. Revenue's up 50%, but the net income is down by 79. And it really is like the profits are down by 50. So it's just a margin problem with Hims. But they are doing acquisitions, like they're doing some hormonal health acquisitions, like building up their testosterone. They're like expanding their business and other revenues. But yeah, they just leverage up their balance sheet to do that. They used to have this fortress balance sheet, no debt at all, but then they issued a bunch of debt. But they bought a company. I wonder how this is going to go. They bought a company for 900 mil. Oh, and then the margins are what you really want to watch on Hims. So yeah, because on the price of net income and forward PE, 2-year out PE, they do look expensive. That's the unfortunate part. Ooh. DHI, is that DR Horton or DR Horton? This is a home builder. Okay, I actually really like the home building industry. They always trade at low multiples, and they have high dividend yields and high buybacks. So DR Horton trades at a 13 forward PE. That's a cheap valuation, a 13 forward PE. Yeah, home builder. 92% of the revenue is home building. Obviously, really interest rate sensitive. Kind of sells a commodity. But yeah, if we go to their net income right here, they're easily making, check that out, like 800 million to $1 billion of net income still. Obviously it's in a decline right now, but with this new interest rate cuts, probability and everything, it's a big tailwind, and it's that growth, that future growth is being priced in right now. We kind of see that with all the interest rate sensitive stocks, like the REITs. You look at Home Depot, they're all have this massive 2-day great performance. But anyway, they're trading at 13 times PE. You can see they're easily making 800 to $1 billion of net income a quarter. Let's go see how much the dividend costs, because this company does pay a dividend, and I want to show you the share buybacks because it's super impressive. So they pay a dividend. The dividend only cost 118 million, and it used to cost 130 million. How did the cost of the dividend go down? This is the best part. This at the top here, they're literally doing $1 billion of buybacks a quarter. If you kind of average it out here, they spend over $1 billion a quarter. And when they do these share buybacks at a low valuation, so here's what that does. The net income fell by 29% year over year, but the net income per share only fell by 22. It fell way less because the share part of the ratio went down. Whenever they buy back their own shares, it makes the cost of the dividend go down, as we saw, makes the PE ratio go down, gives you more ownership in the company, and it just makes the stock go up. So yeah, I think this one's going to be a great one. Nice interest rate sensitive play as well. I think Warren Buffett just bought that stock as well. I don't remember exactly. Actually, we can see Buffett's exact trades. Or no, his increased position in the most. Oh, he bought Lennar. Okay, Lennar is another home builder. They do exactly what DR Horton does. Lennar and DR Horton are like the same thing. So William said Soundhound. This is a bit of a risky one. Hey, what up, my music? Good to see you. I saw you said, Nathan, if you got a stock you may look at, let me know there. Yeah, if you guys got any stocks you may look at, let me know. We can check them out. I'm trying to get to all these. I do apologize if I miss some of them. Like I want to get to LCE. Looks like some lithium stock. And Duolingo. That could be a cool one. Yeah, we'll definitely get to Duolingo. What up, Lopez? So here's SoundHound AI. This is a small one. They're worth $5 billion now. But there's one metric you want to watch if you own this company, and that's their subscription revenue. So this is a subscription model company. Basically, I've been on their website before. You basically just give them a bunch of your voice's data, so you just talk a bunch, and then you give it a prompt, and it can basically say whatever you want in your voice. You not having to do it. So basically, if you go to their subscription revenue, they used to have no revenue at all, $400K of revenue a quarter, but then they've had this massive growth in subscription revenue. This is why the stock has gone up so much. Like the subscription revenue is up 80% year over year after it grew 3,700 or up from 19 million. So they're continuing this growth, and that's what's beating on expectations right here. last quarter specifically, they expected 32 mil, they did 42 mil. You know, I don't love this one in the long run. I think this is a swing trade stock. I mean, you trade it for their subscription revenue, but in the long run, I mean, they're probably going to get out innovated. Like, there's already a great Apple feature where you can like get your voice replicated. Yeah, if we go to this company's bottom line, they're losing a lot of money. They're losing 50 mil in net income a quarter, but they do have the top line growth. Like, this is what's like actually good. The revenue's up 67% after it grew 89, after it grew 20. So they're on a massive top line streak of growth there on SoundHead AI, but they're not anywhere near profitability. So you watch the subscription revenue on that company. Nvidia used to own them. Nvidia actually sold out of them completely. Okay. Duolingo, thanks again for that gift there, Lopez. So Duolingo, this one is the thesis, the moat is kind of being hurt on Duolingo right now. A great company though when we judge their financials, but I'll kind of explain why I think they're being hurt right now. In 10 years from now or 5 years from now, we might not need to learn a new language. Like, if you wanted to learn a new language, maybe the technology will be so good where AI can convert it in your little Meta Ray-Bans. But yeah, they're not exactly cheap either. If we look at Duolingo on a forward PE, they're at a 40 forward PE. So that's why they're probably fairly priced right now. Like, I'd nibble on Duolingo, but I wouldn't make it a big size position yet because I feel like there sadly might be more downside room potential. As I know OpenAI is working on their own language learning app that's free. Basically, you're paying Duolingo a subscription to learn a language, and they're making so much money off it right now. Here's where the revenue comes from. 85% of it is their subscription model revenue, and it's so impressive. It's up 45%, after grew 48, after grew 45, after grew 49. Like, that's the thing. I'm saying AI is hurting them and stuff, but it hasn't yet. Like, their numbers are great, and that's why it certainly put Duolingo on the watch list, because this subscription revenue, like, look in the middle, it's only green. It's growing 40 or 50% every quarter. And if you don't pay for their subscription, you see a bunch of advertisements, and their advertising revenues at a record too, up 45%. And you want to do like a 2-year out PE, because they just got net income positive again. We don't look at their current PE. If we look at their current PE, it says a 22. They're not actually at a 22 current PE because they had a one-time adjustment. It says they made 290 million of net income. No, they only made 35 million, but it was still a record quarter, and they're basically getting profitable for the first time ever. They deleveraging like crazy their balance sheet. Everything on Duolingo in terms of fundamentals of financials are headed in the right direction. EPS projections are, it's supposed to be $1 of EPS a quarter. They're going to do $4 of EPS, and they're 100. Honestly, I'd nibble on this one. I wouldn't make it a big size position because you still got that AI thesis really hurting them, and the 40 forward PE isn't super cheap, but I love their subscription numbers. It's kind of like in Adobe right now. Adobe's also kind of being hurt by the AI thesis. Like, will we need Photoshop in 10 years from now if we have, AI, like Google Gemini, create a great logo, all that. What was that company? That was Duolingo, DUOL. And Nicolo said, "Is GSL really worth buying?" I'm actually about to make a video about this one. Oh, we got to get to Amazon. I'm seeing some great stocks here. Oh, I'm so sorry, Ludo. We forgot to look at LCE. We got to get to LCE. That was a lithium play. I'm so behind here. I do apologize. But this is an interesting one. If you like high dividends, here is a super cool one I think you'll like. They have a 5.5% dividend, but look at the payout ratio in the middle. And this is real. The payout ratio really is only a 17%. So what is GSL? They do exactly what Zim does. If anyone's heard of Zim before, they ship cargo over this ocean. It's a freight company. So basically, yeah, like these big cargo ships. I think they just acquired, Global Ship announces 3 container ships, or they're buying it. Anyway, this company has a super safe, in my opinion, 5.5% dividend. So here's their net income. Every quarter, they're easily making 80 to 100 million in net income. If we zoom out, check out how consistent this is. They're always making 80 million in net income a quarter. And we can scroll back all the way to 2021, and it's just been great. And if we compare this to a Zim, because this is like a big, they do the exact same thing. Zim, this one's kind of popular. This one's not at all-time highs. And if we go to this company's net income, it's way more choppy. Like, it's down 90% year over year. 2023 was negative for 4 quarters in a row, but that didn't happen on GSL. And let's keep looking at this one. I want to show you how safe, again, like look at this stock. Well, if we zoom out to right there from the stock split, but from 2019, the stock has been from $8 to 35 because the fundamentals are so good. Again, they're easily making 90 mil of net income a quarter. So remember that they're making 90 mil of net income a quarter. If we go to the dividend only costs 21 or 22 million of net income a quarter. So they can easily afford the dividend as long as they're making over 20 mil. Now there is some risk here. Like I'm not going to own this one. They're actually headquartered in Greece and pay no taxes. So that's another reason why their margins are so high. Like if you go to their net margin right here, it's a great margin. Look at this net margin of 49, basically a 50% net margin. But I might actually, that's a lie. I might actually consider putting this one in my Roth IRA. Yeah, if we go to this company's tax rate, it's blank right here. It says 0% because they don't have to pay taxes in Greece. That's why they're headquartered there, and then they can pay out massive dividends. So anyway, it's an interesting one with a very safe 5.5% dividend yield, 17% payout ratio. Let me know what you think about that one. So Amazon, oh wait, what was LCE? Let's do LCE real quickly. LCE, I actually can't find that one. Are you talking about Century Lithium? He's got to be talking about Century Lithium. I'd be careful. They're only worth $77 million, but they are up 15% the previous day. Okay, so yeah, they're a startup. I don't really buy these because look at this. If we go to the revenue, it says no data because they've never sold anything. They've never sold a product or a service. They're a startup. They basically have these lithium mine assets that are eventually gonna make money. But yeah, they have a great balance sheet, all these assets and cash, but no debt at all, no liabilities whatsoever. So that's good news. But we kind of want to see them finally start to make revenue, and they're not expected to make any revenue anytime soon. But interesting small cap if you maybe wanted to trade on that one. So, we got to get to ARM and Amazon too. So let me get to ARM. ARM is really a royalty company. This is one of my favorite stocks out there that I don't own, and I really want to own this one. So check this out right here. There's this brokerage is telling me that there's a bullish continuation wedge, so 95% rise probability according to the technicals. But as you know, we judge them off their fundamentals because that's what matters in the long run. And if we go where this company's revenue comes from, 63% of the revenue comes from their royalty revenue. And then the other chunk comes from their licensing revenue, very high margin businesses. So if we go to their gross margin, this is the crazy part, literally Reddit type margins, a 98% gross margin. That's incredible. And look at these expectations. The revenue's up and to the right. And they beat on this quarter by like 13%. They expected $1 billion of revenue. They did 1.13. EPS projections are up and to the right. So they make easily a couple $100 million net income a quarter, but they're expensive. Quality comes at a price, and the forward PE is 101. That's great EPS growth. The current PE is of 143. It's going to go all the way down to 101, so that's great progress. But it's still too expensive for me to pay. But they're at like the top of my watch list. I'd love to own ARM, a great business model, making these energy efficient chips. They're in like every Apple iPhone now. So I do like ARM. So let's get to Amazon. Yeah, Amazon. I actually just bought another share of them last week. Every time I see Amazon on a dip, I always try and dollar cost average into this one. And if I didn't own Amazon and I wanted this as 5% of my portfolio, I really wouldn't make it 5% of my portfolio today, but I would make it 1% because they're not crazy expensive. Amazon's at a 32 forward PE. I mean, that's not nuts, a 32 forward PE for the type of growth Amazon has. I'm about to show you this. So obviously the AWS is growing like a behemoth, and they just got multiple new AWS deals, but they're the number one cloud market share, more than Oracle, more than Azure Cloud by Microsoft, more than Google Cloud. Amazon is the number one cloud market share. They have it does over 107 billion of annual revenue for them. It's their highest margin business, and the margin expansion on Amazon has been the real winner. So here's their net income. It was 22 billion this quarter. If we zoom out on Amazon, it was kind of a tough buyback here. In 2022, look how choppy their net income was. They were barely making net income, but now look at over time. In 2024, they did up to 10 billion of net income a quarter, and now it's going to be over like 20 billion of net income a quarter. Amazon prints money, and that's because they invest so much in the future, deleveraging their balance sheet. Liability ratio went from 55% to only 49%. Incredible. And if we go to their cash from investing activities, you want this to be negative because that means they're buying assets, buying Nvidia chips, buying companies, buying real estate, whatever. They're spending 25 to 40 billion a quarter. You can't outspend Amazon. If this number was positive, that means they're actively selling out of their assets. So it's great that they're just innovating so much. And Amazon's a never sell company, in my opinion. Robotics play, e-commerce play, advertising play, subscription play, cloud play. It's like a UPS, Amazon, Oracle, Walmart, grocery store, all in one. AI play. I think they were considering buying like 10% of OpenAI. They're a Hims in one, a Hims and Her stock in one as well. They're doing this like a Costco type store. Amazon proposes and receives approval for a 230,000 square foot retail store in Illinois. AWS partners with Omo Bio to accelerate autonomous vehicle deployment. So, Amazon Pharmacy launches Wegovy pill for how much was it? $25 per month for insured customers, $150 for uninsured customers, all 50 states, same day delivery, so it's Amazon's an ETF in one. You can't bet against them, and that's why I own them. I might be biased, but I'm always trying to build up more shares there. All right, let's look at some more here. I'll give you an interesting one, RHM. Ooh, remind me to get to RHM in a minute here. I'm going to look at this one. Should be putting it in American oil because as we're getting Venezuela oil. The oil stocks have been doing great. Like a boring Chevron right here, like a Chevron. Look at them the past week. This was kind of the Venezuela news. They gapped up massively. Oil stocks, you don't buy these to outperform the tech-heavy S&P because they never do. Oil stocks never do outperform the tech-heavy S&P 500, but what you buy them for is the diversification. You keep it as a small percent of your portfolio, and whenever there's random news, like war fears, inflation fears, safe haven assets go up, oil stocks go up as well. And in the meantime, while it kind of stays flat for a while, you collect in the meantime a 4.2% qualified dividend. So you get 4% of your money back instantly every year in a qualified dividend. Then you kind of hope for 3 to 4% stock price appreciation on top of that on average. So anyway, yeah, the oil stocks have been doing pretty good. My bet is actually MUSA. That's kind of my oil and gas play. They've done great as well on this, and they do buybacks specifically. Someone said app, or if you want to get this app I'm on, it's in the link tree in my bio. Very first link there, it's a brokerage called Moomoo. But there's also AppLovin, I saw someone say. So let's actually check out AppLovin. Then we'll get to Astera Labs. We'll do that one too. And RHM. So here's AppLovin. This is one of my favorite growth names out there. I think you should put this on the watch list because they are literally one of the most impressive stocks I've ever seen. Incredible financials. Check out this quarter. They did 1.4 billion of revenue. And on this 1.4 billion of revenue, they netted 835 million. That's the after-tax number. The before-tax number was 1 billion. So they really did net 835 million after paying 200 million of taxes. And so that means their net margin is a 59%. I couldn't believe the margin expansion. Like it was already crazy at a 52%, but they continue to grow the margin to a 60%. Now, this is what makes the company a growth monster. The free cash flow was $1 billion, up 91%. Like look at these year-over-year growth rates at the bottom. It's triple digits every quarter. That's why this stock deserves all the hype and all the stock price appreciation around this one. And if we look at the forward PE, it's not too ridiculous. So yeah, 47 forward PE. But on a 2 or 3 year out multiple, it's probably still pretty decently cheap. Check out the EPS projections. The EPS is literally going to go year over year still. There's still going to be triple digit EPS growth the next 2 quarters. EPS is going to go from $1.67 to $3.15. And that's assuming they don't beat on expectations. Like it's insane how great AppLovin is. Perfect growth company. But too expensive to probably buy at current prices. So is this Rain Metal? RHM, or I forget what RHM is. Then we'll look at Astera Labs. We'll look at OPTX. What's up, Eric? Good to see you, man. Hope everyone's having a great Sunday. Any Australian stocks? Not really. Yeah, type in RHM. It says no data. I unfortunately cannot find RHM. Is that called Rain Metal? I think there's like a weird tickers. It's like a Australia, or not, it's like a European company. So let's do GMAB, then Astera Labs, and Oxy Petroleum. That one's owned by Warren Buffett. Actually don't like Oxy Petroleum anymore because they just sold their best assets to Berkshire Hathaway. So I actually like Berkshire Hathaway as a better purchase. But anyway, here's GenMab right here. Haven't heard of this one before, but they're at a cheap valuation. Is this a pharmaceutical company or I don't remember. Let's see what they do. So, oh, they sell a bunch of prescriptions, it looks like. So, Darzalex, this is 65% of all the revenue, this prescription. It grew 17% year over year after it grew 26%. So, that's seeing some nice growth. Their next biggest prescription, Kezi Patima, whatever, that's up 45% after 65% growth. So, this is some great growth. We're seeing net product sales, that's up 50% year over year. So, actually, I really like the growth. All that growth for only a 22 forward PE. So let's see what their net income is. So yeah, they actually make good money. So they made $1 billion in revenue, and on that $1 billion in revenue, they netted $400 million in net income. So that means their net margin is a 40%, and this is real. The before tax number was 459, and they netted 400 mil. So they paid 60 mil of taxes. So they really did print money. And a cherry on top is a fortress balance sheet. This is a phenomenal balance sheet. I mean, they have $3.4 billion of cash. And what's the market cap? $21 billion. So well over 10% of the entire market cap is their cash on hand. I'm actually going to put them on the watch list. I see why they're at an all-time high. Or, well, not an all-time high, but on this chart, it's at an all-time high, but 52-week high. Good fundamentals there I like. Maybe there's some stuff I don't know, like maybe one of their patents expires, or maybe there's a reason they're at a 20 forward PE. I don't know. So sorry if I'm behind here. I am behind on a lot of stocks. I do apologize. Did you see Jerome Powell just address interest rates? I did not see that. Wonder if that moved the market. Astera Labs is another quality growth name that I recommend you put on the watch list. Oh, we'll find Rain Metal after this. I really like your content. Hey, I really appreciate that. What's up, Craig? And Tech said Micron. Yeah, Micron's a huge memory shortage play. We'll check them out. So here's Astera Labs. I'd put this one on the watch list too. Is there any news around this one? No news recently, but here's why Astera Labs deserves your attention. Check out the growth and how they're beating on expectations. Analysts expected 206, they did 230. They beat on revenue. They beat on EPS by over double. Analysts expected 23 cents, they did 50 cents, and they beat on EBIT. So this wasn't some one-time adjustment. Like, they really did triple beat. Like, the earnings before interest would beat by 30%. So if we go to this company's revenue, it's up triple digits for the past 5 quarters in a row. 6 quarters, 7 quarters. So triple digit growth for 7 quarters in a row, 230 million. On this 230 million of revenue, they netted 91 million. So the margin expansion is ridiculous. And another company where it just takes so much risk off the table, a big safety net, is this balance sheet where they have no debt. They don't owe anyone any money, and $1.1 billion of cash. So they're just building up their cash pile. And that $1.1 billion of cash was in short-term investments. So that's 1 to 3 week treasury bills. They actually make 11 million of interest a quarter just on their cash. So anyway, Astera Labs is a great growth company. But the sad part is they're still expensive. Like, even after this kind of dip, quality comes at a price tag, and this one is really expensive, trading at 38 times revenue. So not 38 times net income, 38 times revenue, but the forward PE is 106. So what do you learn whether if a stock deserves a PE or forward PE? I always look at the forward PE because sometimes there's one-time adjustments to the current PE. So it depends if I see there's a one-time adjustment. But anyway, yeah, the forward PE basically just uses the next year's net income. And yeah, Astera Labs, they're a good one. All right. Let me type in the name Rain Metal. So here it is, ticker symbol RNMBY. This is like a European, I believe, like aerospace and defense company. No way, dude. King Louis, that was crazy. He just left a double firework. Yo, King Louis, thanks so much for that gift there. If you got a stock you want me to look at, let me know. I really appreciate that, King Louis. You've been here the whole time. I really appreciate that. And thanks again. And Josh too. Josh with the gummy bear. Heck yeah, I really appreciate that. So anyway, here, yeah, this is a European company. So we'll convert the currency from euros to USD just to get a bit of a better idea here. So they sell vehicle systems, weapon and ammunition, electronic solutions, power systems. So yeah, they're probably a lot in demand. Yeah, wow, check out next quarter. The revenue is going to go from 2 billion to 3.5 billion year over year. And next quarter is supposed to be 5.8 bill. So there's actually the EBIT's supposed to bump up too as well. It's supposed to more than double year over year. These comps look great. And they're already net income positive. Like, it is in USD. They're already making a great couple $100 million net income a quarter, but it's supposed to continue to double. I mean, that's incredible. So let's see. Yeah, rest of Europe is 46% of the revenue. Germany is 30%. So yeah, like a European, I believe, aerospace and defense play. The current PE is 103. The 4P is 50. So they're supposed to double their net income literally just in a year. We can kind of see that just from the EPS projection. But anyway, great one, but probably a little expensive at their price. What is this app? Yeah, hey, this is a brokerage right here, Jonathan. It's a brokerage called Moomoo. It's where you buy stocks on. If you want to use my affiliate link, it's in the link tree in my bio, very first link there. Or you can just type it into Google, brokerage called Moomoo. But yeah, my favorite app to buy stocks on. And if you deposit $100 or both, get some free stocks. But it's a free brokerage. You don't even have to deposit money to still use all these great tools. So thanks again, King Louis, for the crazy gift. He said Nvidia stock. Let me show you why Nvidia, I think if you buy them right now, you still will get 8 to 10% of your money back a year. And thanks again, Josh and Lopez and King Louis. I really appreciate y'all. We'll look at LUNR too. So here's Nvidia stock. Here's the crazy part. If we look at Nvidia's forward PE, where is that right here? Yeah, the forward PE on Nvidia is a 28. That's why we're not in a bubble, I believe. So the forward PE is a 28. It's using these orange numbers right here because the net income is still literally supposed to double. The EPS is going to go from 80 cents to $1.50. That is incredible year-over-year growth expected. So the EPS next quarter is supposed to be $1.46. Like it's already a record EPS. It's never been higher than $1.30 before. They did $1.30 of EPS. Next quarter is supposed to be a new record, $1.46 and $1.56. So this quarter, $1.30 of EPS is the same thing as $32 billion of after-tax net income. And it's supposed to just continue to climb and climb higher. I can't believe it. And if another company can pull this sort of growth off, they also deserve to be worth $4.5 trillion. But yeah, that's why I think even if you buy Nvidia now, the price you're paying for the growth is fair. Like that's why there's still upside on Nvidia, in my opinion. These EPS growths are still great. And no way, Josh, with the firework as well. What app can I buy stocks on? Yeah, hey, Zune. If you go to the link tree in my bio, the very first link there, this app I'm on right here, my favorite app to buy stocks on. It's a brokerage called Moomoo. Very first link in the link tree in my bio. So try not to spam there. But appreciate you. And thanks again, Josh. That's crazy. But yeah, Nvidia netted $32 billion after paying taxes. And look, the total revenue is $57 billion, and they netted $32 billion on that. So their net margin is a 56%. They really do have a crazy net margin. They're also doing a bunch of investments. You know, they just bought a big stake in Intel, moving some of their manufacturing to Intel to please the government. You know, buying, I forgot the company's name. Oh yeah, Nvidia unveils Rubin AI chip. Nvidia unveils Alpha Mayo AI platform. Nvidia projects $65 billion. What was that? $65 billion revenue for just Q4 next quarter. $65 billion of revenue. What do analysts have it at? Oh yeah, $65 billion of revenue. So yeah, and check this out. Great market share. They have a 24% PC GPU market share, up from 20%. They have an automotive software that's growing even more, kind of like open source Tesla kind of thing. So they're even like a Tesla competitor. So anyway, Nvidia is a great, chip AI play, great moat, phenomenal fundamentals. So yeah, they seem to be stuck. Do you know why? It's probably just, they always kind of stay flat for a while before preparing for the next leg up. So if you just be patient with Nvidia, I think if you buy it even right now, even though the market cap's 4.5 trillion, a lot of people say it's tough to double, 4.5 trillion for you to get 100% return. They have to be worth, 9 trillion. So, but I still think you'll get 8 to 10% returns a year. And I'm also a fan of buying the whole Nvidia ecosystem, like Amphenol, who supplies their copper cables to Nvidia, and a lot of their, they also supply a bunch of copper cables to Google's TPUs. So, yeah, thanks. And Josh, hey, Josh, did you have a stock you wanted me to look at? I really appreciate all those gifts there. I'm in no way, dude. I didn't even see this. Aaron on the YouTube stream with the super chat. Yo, thank you so much, Aaron. He said, thanks for your analysis. Dude, thank you for being here. I stream every Sunday at this exact same time. If you got another stock you want to look at, let me know there. So Lopez says LUNR. So this one is a space play. They basically get a bunch of contracts from NASA. I actually watched this stock back here, and here's what happened. This company launched a rocket into the moon, a little spacecraft to the moon, and this robot, it tipped over and didn't collect any data, and then subsequently the stock tanked as the rocket tipped over and got no results from it. And they had to leave it there. But now they got more contracts, and check out the revenue that's expected in 2 quarters. So if I was a shareholder here, I'd really hold this company for the next 6 months. Yeah, revenue is expected to go from 50 million to 177 million in 2 quarters. And they're not supposed to make any money on that though. That's the weird part. They're still supposed to be EPS negative, but I guess there's just a lot of. I really wouldn't trust a lot of money in this name. They kind of trade. It's like a swing trade. It's a sucky swing trade in my opinion. I like Rocket Lab probably a little bit better. Yeah, I definitely like Rocket Lab more. But it looks like there is some growth that's going to come in 2 quarters. So I am curious to see that. So it's not the end of the world on that one. Hey, Crispy, what's up, man? He says, what are a couple of your highest conviction plays for this year? That's a great question. Um, things that look cheap right now that I think are at a pretty fair valuation. I really like Southern Company. This is a bit of a higher yielding one, a 3.5% dividend yield on Southern Company. Progressive's another one that seems pretty decent right now. These are kind of more some value names. Like this trades at like a 12 PE. You get like a nice yearly special dividend. TradeWeb is an interesting one. I actually want to cover if anyone wants me to cover them. But TradeWeb is a super interesting one on a nice dip right now with great fundamentals. Microsoft, the behemoth only trades at a 28 or a 29 forward PE. That's so cheap. That's so cheap. But yeah, I want to definitely get some better picks. Um, so can you do a video about you personally and how you got into investing? Hey, that actually be a good idea. I might do that, Deborah. Um, Oh, I'm so behind here. I forgot to look at like OPT. Hey, yo, Eric, are you still in here? Eric in. We'll look at OPTX and tech. I'll look at this one more time as a memory play. I'll be real quick about this one because we already looked at them. I'm seeing some about SanDisk as well. And Boeing. Josh says, I got nothing. Just enjoying you going over stocks I haven't seen. Hey, thanks so much, Josh. Yeah, hopefully I can introduce y'all to some new stocks you've never heard of before. So here's Micron. It's the memory shortage play. I'll be quick on this one, but I think there's still another 30% upside if this one, if the memory shortage doesn't just end instantly. But if we look at the forward PE on Micron, they really do trade at 9 times forward PE. That's what's crazy. Like on a forward PE metric, like that's not like this could probably stretch up to like a 12 forward PE before it maxes out. Because check out the EPS growth projections, and these are real. The EPS this quarter was $4.60. This was a record, $4.60. That's the same as literally $5.2 billion of net income. They're expected $8 of EPS next quarter. So they're basically supposed to get $10 billion of net income next quarter. And then the quarter after that, it's going to be $9.50 of EPS. Like they really do trade at only a 9 times PE, forward PE, when the current PE is at 32. That's the crazy truth about Micron. Why, if I was a shareholder here, I really wouldn't trim or sell out of Micron. It probably could just continue to squeeze higher because those are great forward expectations. Isn't Micron sold out for 2026? I believe it. I totally believe it. Same with like a SanDisk. SanDisk has a really cheap forward PE. Why is Rocket Lab your favorite stock? Ooh, shoot, I might cover Rocket Lab too. Remind me to get to that one. I do have a bit of a backlog here. King Louis said FIX. Yo, this stock right here is one. It's my best performer, but so I'm totally biased here, but I think this one's also another one, kind of like Micron. We're just going to continue to climb higher because of how great they are in terms of beating on expectations. Like if we go to the forward PE, it's a 34. I think that's totally justified, a 34 forward PE, but it's definitely tough to allocate new money. Like I'm certainly not buying any new shares or allocating new money to the stock, but I'm certainly not selling or trimming because they're just going to continue to climb higher. I believe MEP workers, which are mechanical workers, electrical workers, and plumbers, are all going to be in such demand from the whole AI boom. And if we go to their electrical work right here, that's up 72% year over year. Insane new record. And if we look at the mechanical revenue, that's up 25%. If we go to the revenue expectations, they beat like crazy. They beat on revenue by massive 30%. They beat on EPS massively and EBIT. And if they beat 30% on EPS the past 3 quarters in a row, they're going to continue to beat on EPS. So this is the crazy part as well. The revenue grew 35. So the revenue's up 35, but the net income is up by 99. So that means there's margin expansion. They now have a 12% net margin. And there's even room for them to continue to grow this net margin. Even if you grow your net margin by 1%, that adds just so much to your bottom line. So they made $290 million of net income just this quarter. And they have a dividend. The dividend only cost $17 million. So instead, since the dividend costs a little, they're doing share buybacks and they have no debt at all. $860 million of cash, $10 billion backlog. This is has the DNA of a multi-bagger. It's certainly tough to buy it now at all-time highs. They also just literally last 2 weeks got added into the S&P 500, but they're my largest holding by far, and I'm so glad to be a shareholder of that one. So SMCI, please. I wonder why it lags so badly. So Supermicro is actually having a valuation, a margin problem. I think I know why this one's struggling. And sorry if I miss any stocks there, Josh, if you have one, or Lopez. So hey, thanks, Josh. I appreciate you checking that out. And I didn't know you saw that. And hey, Palantir, we got to get to Palantir there too. So here's Super Microcomputer. I think I know the reason why this one is struggling, because if we go to explain it simply, if we go to the revenue growth is gone as well. The revenue is down 15% year over year. So the revenue is down 15%. But the net income is down by 60. And that's not some one-time adjustment. The profits, the net income really is down by 65% year over year. So that means margins are collapsing. This is the sad part. They already just sell a commodity. They just installed chips for you. But the net margin fell 50% to only a 3.3% net margin. They used to have like a good 8 to 10% net margin. But to fall to a 3.35, that's really the sad news here. And that's why I think, they've been missing on expectations. They expected 5.8 billion of revenue. They only did 5 billion. They missed on revenue, missed on net income, missed on EBIT as well. So, but there is actually interesting future EPS growth. The EPS is supposed to go from 19 cents to 43. So honestly, that's pretty attractive. So if we go to the forward PE, it's a 13. A 13 forward PE starts to honestly look cheap. So on the other hand, like, it might actually be a decent buy the dip opportunity, but I wouldn't trust too much money in this one. But again, I know there's like, when AMD did the OpenAI deal, the Supermicro earnings got revised higher, the expectations. So Supermicro Computer expands manufacturing and liquid cooling capabilities. Supermicro partners with industry leaders to launch AI-powered retail solutions. Anyway, revenue is supposed to literally double still in EPSs. So that's an interesting catalyst to watch. So yeah. Do you have any recommendations that are more affordable? What do you mean by affordable in terms of like what per one share cost? Because you can actually buy fractional shares, and I have a bunch of stocks here in fractional shares, so I'm never scared to buy fractional shares. But yeah. Hey, what up, Mike Murphy? Good to see you again, sir. In Avan, or is that a stock ticker? AVAN, or let me know what stock. Give me the name of the company, and we can check out that stock for you, Mike. I got you. And hey, what's up, Mo? I'm doing great. How about you? CHYM, is that Chime Financial? I think this might be like a buy now, pay later company. What's up, Craig? So, okay. So this is what they say. Design and development of a digital banking application, online banking, fee-free overdraft, mobile banking, automatic savings, mobile payments. Maybe we can check out their website right here. Like, yeah, I feel like I've heard of Chime before. So, yeah, they're kind of like some bank partnered with Visa. So let's go judge them off their financials, because that's what matters. They did IPO 6 months ago in July. So they haven't been public for that long. So we don't get too much data here. But the data we do get says they got great growth. The revenue's up 29% year over year. Revenue's up 29. They did, though this was their IPO fee, says they lost 900 mil. Are they expected to, what's the revenue growth? So the revenue growth is really good. It's expected to go just continue to hit a new record, 630 million in 2 quarters. They're not expected to get EPS positive in the next 2 quarters, but they are EBIT positive. So anyway, it's an interesting one. They just IPO'd, so there's not too much data here, but some interesting, all the banks are at all-time highs. JP Morgan's at all-time highs. Same with Goldman Sachs. So, it's interesting. There is no forward PE though, because they're not making any net income yet. So there is no forward PE, but it's a interesting one. Ooh. So yes, Supermicro is a bit of it's a mixed bag there. What up, Koos? Haven't checked in a while. Good to see you. Hey, what up, COOS? Good to see you, man. Red Cat. Ooh, should we do RCAT? What do you think about Shark Ninja? Ooh, Shark Ninja is an interesting like appliance play. They sell like blenders and stuff. Is it worth buying as soon as the market opens, or wait to close to buy? And it depends, if you plan on buying a stock and holding it for the next 10 years, it doesn't matter when you buy it, because so But if you're like swing trading, I don't know. So here's Red Cat Holdings. Let's see. This is a drone play, and their Black Widow drone just got recently like NATO approval, and so there's a lot of growth. So basically, you still got to be super careful with this one. You wouldn't trust a lot of money with this one, but it's still one you want to pay attention to because check out the growth. The revenue this quarter was 9 million. Like this was already a record, 9 million of revenue. It's never even been close to that before. So they did 9 million of revenue, but they're expecting next quarter 21 million and then 23 million. So the comp is literally going to be, the revenue is going to go from 1.6 million to 23 million in just a year. So dramatic change to the fundamentals because they're finally getting real orders because you couldn't buy this stock a year ago because they really didn't have too much revenue, but there's now great expectations. So it's like basically 25, or there's going to be 100 million of annual revenue, but there's still, losing a lot of money. They lost 17 million this quarter, but it looks like they just fortified their balance sheet. Let's see how much cash they have because, so they have $206 million of cash. So they can afford to lose, 17 million for 10 quarters if they needed. So they can afford to lose some money. I'm assuming they diluted the crap. Yeah, so they did dilute the life out of you by issuing shares. They diluted you by 165 mil, but that also gave them 165 mil of cash and fortified the balance sheet, basically secures them not going bankrupt for many, many years. So especially at a crucial time when their drone orders are popping off. So anyway, it's an interesting one. It really is. One of the probably better drone plays. So Shark Ninja. Navan is the stock name. Okay, we'll check it out after this. So here's Shark Ninja. This one, they sell like blenders, like juicers, ice cream makers. Let's see here. So yeah, cleaning appliances, that's the shark part. But then like cooking and beverage appliances, food preparation, beauty and home environment appliances. Anyway, they actually make good net income. I'm actually surprised. The net income is up 42% year over year after it grew 600% year over year. So they're seeing great net income growth. What's their net margin on these? So a 12% net margin. That's the highest net margin they've ever had. So the revenue is 1.6 bill, up 15%. So they're actually growing double digits. They're growing their margins even faster. And they're at a 21 forward PE. That's where the company is actually at a fair valuation, a 21 forward PE. That's probably fair for a company that just sells like blenders and like Swiffers, whatever those like shark things are called. But anyway, it's a really interesting one. I can see why they're at all-time highs. 21 forward PE, still with like 30-40% EPS growth through the next year. So interesting name there. NAVAN. I hope I can find that one. Okay, so it's NAVN. We found it. Check it out. So Navan stock. They're a $4.3 billion company. They just IPO'd, so they haven't been public for too long, just since October. But let's go find out what the company actually does. Cloud-based technology platform for travelers. Let's check out their website right here. So create a company travel program. Oh, so it kind of helps out airports or something. Helps you maybe convert currency, some AI, maybe chatbot right here. So build, manage, scale your company's travel program with ease. So some sort of travel software play. Let's go see if they got revenue because that would be interesting. So the revenue was 194 million, up 30% year over year. Again, they just IPO'd, so we actually don't get any more data besides this because they literally just IPO'd. But they got their IPO money. They fortified their balance sheet. So I really need to wait more to get more data on this one. They did beat expectations this quarter too. They expected 182. They did 194. So the EBIT's supposed to be break even in 2 quarters. They beat on this quarter. So anyway, it's I don't know really how to value that one. $4 billion company. Interesting there. Haven't heard of them before. Is this the year for Sprouts Farmers Market, or should I sell and buy more Amazon? So yeah, Sprouts Farmers Market has been tanking. They're kind of being out innovated by like an Amazon because like Sprouts Farmers Market, Whole Foods, kind of the same thing. And Whole Foods / Amazon is like an e-commerce platform where anything you can buy on Sprouts Farmers, you can buy on Amazon. But this one still has great financials in my opinion. It's probably like fair. Honestly, that might be a cheap valuation, a 14 forward PE. That's like what Kroger trades at. Actually, that's really cheap when you compare it to Walmart, Costco, or Amazon. But yeah, 14 forward PE. Here's why I'm not going to sell out of my Sprouts Farmers Market. So, groceries, this is a net margin game. It's a very low net margin business. But check this out. net margins year over year are all really green. It's up 15% this quarter, up 20% last quarter, up 32%. They really do make great net margins. So if we go to their bottom line, they're easily making over 100 million of after-tax net income a quarter. And Sprouts Farmers Market doesn't pay a dividend. So what are they doing with all this net income? Well, my favorite part about this one, and here's my position. You see, look how down bad I am. I own this on my Weeble portfolio. I got 10 shares at $128 a share, and it's only $77 a share right now. But my favorite thing about this company is the share buybacks. If we go to the total common shares outstanding, look at it on the very bottom left. There's currently 97 million shares. So there's 97 million shares right now. We just go back to like 2021. There was 118 million. So it went from 118 million shares just in 2021 to under 97 million. That's crazy. So that's my favorite part about this one. They've bought back 20% of the company basically in just 4 years. So a 14 forward PE seems fair to me, but maybe their moat is kind of being attacked by maybe like an Amazon. So, but they're like a pure grocery store, like a healthy grocery store. I like Sprouts Farmers Market. Let's check out. Ooh, YouTube agent said Netflix. Let's do Netflix and uh, what was these other ones? I've got one following and reading on Ballard. Hey, what's the ticker symbol? Yeah, if you got a stock you want to look at, give me the ticker symbol. We can check them out there. I don't know the tickers of some of these names here. But oh, and Marvel, could you tell me how ETF stocks work? I'm new to stocks. Hey, yeah, I'll explain an ETF after this. It's basically just a basket of stocks. I really like ETFs. But here's Netflix right here. I'll get into that after this. But yeah, here's Netflix right here. Everyone knows Netflix. It's that streaming company. And they're trading at a fair valuation. They're at a 28 forward PE. So they're basically trading at 28 times next year's net income. But one of the reasons why Netflix has such volatility and kind of been falling down and down and down recently is because of this whole Warner Bros. Discovery stuff. Because Warner Bros. Is trying to buy them for $82 billion. But Paramount is trying to buy them for over $100 billion. And it's already decreased to the EPS. So the more Netflix has to pay, the more decreative to the EPS it is. But I still really like Netflix because excluding all that, if they don't do that, like they're at a 28 forward PE. That's a fair valuation. A lot of people would like cancel their Netflix subscription last. And if we go to Netflix right here, they print great net income. This is their after-tax net income. They're easily making 2 to 3 billion of net income a quarter. And it has great year-over-year growth rates. Same with that FCF, which is free cash flow. They're doing over 2 billion of free cash flow a quarter. So that's why I wouldn't mind paying a 28 forward PE. You know, they have 300 million premium subscribers. Their ARPU, their average revenue per month per user is $11.69. Yeah, a lot of people really love their Netflix subscription. I know some people are boycotting them right now, but anyway, Netflix, they're a pretty decent stock. You know, I nibble on them. I wouldn't, if I wanted it as 5% of my portfolio, I wouldn't make it 5% today, but I'd certainly nibble on it. But yeah, an ETF, Mike, basically is just a basket of stocks. My favorite ETF is ticker symbol VOO. It's just the S&P 500, and it just owns a bunch of individual stocks, and they're very favored toward taxes because an ETF can sell and take profits on a stock, and it's completely tax-free for you as the ETF holder. But anyway, yeah, VOO, this ETF, just a basket of stocks, breaks your money up into the top companies by market cap weighting. So Nvidia, Apple, Microsoft, Amazon, Google, Broadcom, it's market cap weighted. So I really like that one. You should just get, if you buy the S&P 500, 8 to 10% of your money back a year, every year on average. You know, most retail investors and hedge funds cannot outperform the S&P 500. So you always got to own a little bit of it. You know, have it as the backbone of your portfolio, or at least have it as a small percent of your portfolio, because if you don't outperform it, you'll feel left out. And if you own it as a little bit of your portfolio, you'll definitely feel psychologically better. It's tough to outperform. So my music said, take a look at my biggest disappointment on the exchange, SOWG. Oh no, man. I look up SWOG. I actually can't find that one. And hey, Michelle, how's it going? I'm doing great, brother. I hope you are too. And hey, thanks again, Aaron, for the crazy super chat earlier. He says ticker symbol ACM. He's talking about, I think you're talking about AECOM Technology. Yeah, Netflix is buying Warner Bros. Discovery. If I said that reversely, my bad there. But yeah, AECom Technology, they had a recent gap down. Look at that. And they gapped down specifically on earnings day. So the reason they fell so much on that day was because they reported earnings and they must have been bad. Let's go see what they reported versus what the analysts expected. What would cause such a massive decline? So okay, so they slightly missed on revenue. It really wasn't too bad of a quarter. If we go to the revenue, analysts expected 4.3. They only did 4.17. So they did miss on revenue. They have missed on revenue for the next 3 quarters, but I think this is almost the reason I almost bet they lowered guidance this quarter, because check out what the year-over-year comp is going to do. The revenue is going to go from 3.7 billion to 3.1. So there's a big revenue decline. So if you go to the right now revenue, it's flat, it's up 1.5%, but in the next 2 quarters, it's going to be, negative 15, negative 20% year-over-year comps. And so they're going in a negative growth environment, and that's why I think the stock plummeted so much. But if we go to their net income right here, they're still printing and making net income every quarter, easily 150 to 200 mil. It did fall a bit year over year. The profits, actually, that was a one-time adjustment. Actually, the net income really did actually grow year over year. So that actually means they grow their margins a bit. Yeah, they grew their gross margins by 10%. But it's these expectations right here, but the EPS is good. Like the EPS is supposed to go up. But they did miss massively on EPS this quarter. So it's a mixed bag. I don't know. Maybe they probably deserve, what was the valuation? Like a 17 forward PE. That's a cheap valuation, a 17 forward PE. But the growth is questionable. So I don't know. Let me know what you think about this one. It's kind of like a mixed bag there. They've done great since 2019. Yeah, 17 forward PE. Not too shabby. Um, Yeah, hey, VUG is another ETF right here. VUG, this is the Vanguard Growth ETF, basically the Vanguard version of the QQQ. So basically the QQQ run by Vanguard. Largest holding, actually, the largest holding is Apple, then Nvidia, then Microsoft, Amazon, Broadcom, Google. Yeah, that's an interesting one. Can you check out ISRG? Hey, this one has been really a robotics play recently. This is they make a bunch of medical devices like those radiation scanning machines in hospitals. So they have one of the best balance sheets I've ever seen. What do you think of the S&P? I love the S&P 500. Should give you 8 to 10% of your money back a year. And then we'll look at Symbiotic after this too. But yeah, ISRG, they're expensive, but this company deserves a freaking really high multiple. So they sell these medical devices, these instruments and accessories, and this is growing phenomenally. It's up 20% year over year. After grew 18, after grew 20. So the growth rate is there. And not just that business, but also they service these machines. They service them every month. They have this reoccurring business. I love the servicing revenues up 21% after 13, after 12. So the growth rate's growing over there as well. And if we go to their bottom line, the net income growth is crazy. Net income's up 25% after 35% growth, and they're easily making 700 million net income a quarter after tax, after they paid a bunch of taxes. And the big cherry on top is this monstrous balance sheet. They have no debt whatsoever and $4.91 billion of cash. So they have no debt at all, $4.9 billion of cash, and that cash is earning them interest. If we go right here, they literally make $80 to $90 million of just interest on their cash. So they're expensive, what was that down here? Okay, never mind. But the EPS projections they always beat massively on EPS. They beat on revenue, they beat on EPS massively, they beat on EBIT every quarter. So that's why that one's at a 70 forward PE. And a bit of their market cap too is just their net cash on hand. Tough to buy them now at all-time highs, but they certainly deserve it. Hey, what up, M? How's it going? What chat are you reading? Who asked for VUG? Hey, I'm actually reading the YouTube chat. Yo, that's actually a good question. That's the best way to support me. If you want to support me, we got 70 people on TikTok, 20 people on YouTube. If you want to support me, best way to is just subscribe to my YouTube channel. I'm streaming on there. I'm kind of reading the YouTube chat first. So I appreciate everyone on the YouTube stream. So yeah, my YouTube channel is called Nathan Roberts. Also in the link tree in my bio. You can just type into YouTube, Nathan Robert. But I am reading both chats. Chuck said, do MicroStrategy. Yeah, so this is your pseudo Bitcoin play. Yeah, we were just looking at this one. Here's kind of the price of Bitcoin versus MicroStrategy. So whenever Bitcoin goes up, MicroStrategy goes up more. But whenever Bitcoin goes down, it actually falls faster. So it's kind of like a high beta Bitcoin. And here's what this company does. It's literally crazy. If we go to their cash and financing activities, they basically just issue shares. Literally Q4 of 2024 was crazy. They diluted you by $8 $18 billion this quarter, and they bought 18 billion worth of Bitcoin. That's why their balance sheet, their assets went from 8 billion to 73 billion year over year, because they diluted you by $20 billion this quarter, bought 20 billion of Bitcoin. That Bitcoin has since up like 30%. On top of them, for the rest of the time, they diluted you by another 8 billion, bought 8 billion of Bitcoin, then a 7 billion dilution. So basically this company just is like a high beta Bitcoin. At the end of the day, this should be seen as more of like a swing trade asset than like a long-term hold. But I don't know. I'd probably rather, if I had to pick MicroStrategy or Bitcoin to hold forever, I'd probably own Bitcoin as a safer buy. But they always kind of rhyme together. So it's a Bitcoin play. Hopefully that was somewhat helpful there. But yeah, that's kind of how they got so much AUM. It's crazy. Oh, yeah, MicroStrategy is risky. I wonder what their net Bitcoin value is. Let's check out AMPX. Ampress is a battery manufacturer. Let's check it out. And Ondas Holdings too, ONDS. That's a really cool one. So Ampress Technology, they're a $1.2 billion company. So a pretty small market cap, but sale of battery products. How's that growing? The expectations are really good. Again, you got to be careful with these small cap names. Don't put too much money in them. But they had a great earnings report this quarter. Analysts expected 16 mil. They did 21 mil. And the comp year over year will look great. It's going to go from 11 mil to 23 million. And that's assuming they don't beat on revenue. So, and this is a phenomenal thing. They're losing basically no money anymore. They only lost $3 million. They're narrowing their losses as the revenue's growing. So that's the best sign ever. So the revenue's 21 million, and they narrowed the losses to only 3 million. They used to lose like 10 mil a quarter. Their assets are growing too. So actually, AMPX, everything here is headed in the right direction, what you want to see. Yeah, losing less net income than expected. So beating on revenue every quarter. So it's a small battery play, a really tiny kind of battery play, but the growth appears to be there. Here's kind of their website. Let's check it out right here. Performance powered by silicone anode lithium ion batteries. Maybe it's like a solar play. Guess here's some facts about them. So anyway, some sort of cool small battery play. It's used in drones, robotics, AI. So anyway, battery play. Nice one there. I do like that one. Another kind of small market cap. Oh, should we look at AMD too? Hey, what up, Jace? Good to see y'all. I'm in MNDY. Ooh. What do you say to UB Tech? What is the ticker symbol for UB Tech? And we can find that one. So I'm a little behind on the chat here. I don't know which stock we should look at here. Oh, let's look at ONDS. Here's another small cap, kind of like that battery play, but this company sells drones, I believe, or some sort of autonomous systems kind of thing. So Ondas Autonomous Systems. It's another small cap where I like these because they do have a lot of future growth. Because if we look at the revenue right here, the revenue is 10 million this quarter. This was a record revenue. They did 10 million of revenue this quarter. It's another one where they expected 7 mil this quarter and they did 10 mil. That's a big 30% beat. But check out what the expectation is in 2 quarters. 25 million of revenue. So the revenue is going to crazy growth. It's going to go from 4 mil to 25 mil. That year over year comp will be amazing. So it's basically, I think it's kind of all priced in at this point. That's probably the unfortunate part. The risk to reward isn't too good. What's the market cap? Okay, so yeah, a $5 billion market cap on a company that'll, and pretty generous, like 100 million of annual just sales, annual revenue. So they are really expensive. It does look like a lot of the growth is already priced in at this point. But if they continue to beat on revenue, like they expect 17 mil and they do like 25 mil, like they could just, the momentum will probably just continue to climb higher. This one I don't think is close to profitability. Let's see. So actually they're not losing that much, only 7 to 10 mil. They only lost 7 mil this quarter. Looks like they diluted you. They issued 400 million of shares, but they fortified their balance sheet. So they now have, 450 million of cash and no debt. So they can afford to lose 10 million a quarter for 45 years or 45 quarters. They announced $1 billion public offering, but the stock's at all-time highs. They should be doing that. Ondas Holding registers shares, following a Century acquisition. So they're buying a company. So that's actually really cool. Ondas Holdings to present 2026 business plan and growth strategy at Investor Day. So maybe they have some Investor Day showing up. Anyway, that's a smaller cap. You want to be careful with those. The risk to reward doesn't probably look great at all-time highs. Market is down tonight. Yeah, hey, well, actually, to be fair, the S&P 500 did hit an all-time high yesterday. So a little healthy RSI retraces either. But yeah, look at the overnight market right now. Qs are down 0.75. S&P's down 0.5. Yeah, here's kind of my portfolio. Google's down a little bit. McDonald's is green. McDonald's usually does good when everything else is kind of doing bad. Um, hey, watch out for that person in chat here. Oh my goodness, I got to get him out of here. Yeah, always watch out for people impersonating me. He's like, I'm giving the first 5 people that DM me a free gift. Please watch out for people impersonating me. This is my only account. I'll never follow you, DM you. I sell nothing. I have no course, book, WhatsApp, Telegram. I don't coach. I literally sell nothing. So please watch out for people impersonating me. The only thing I do have, if you wanted to support me, is a YouTube channel or in a TikTok, so you can hit the follow button. We stream every day. But yeah, let's look at Sezzle. This is a great financial tech stock that I think is just going to continue to climb higher. They've been struggling for the past couple weeks, but they've had a nice recovery, and I think this recovery is going to continue. Oh yeah, look at that. You're right. Sezzle's up. Look at the overnight kind of at the top there. Actually, you can pull up the overnight market right here. They're already up 6% in the overnight market. So I wonder if Dave is up as well. But anyway, this company's forward PE is a 17.5. That's a super cheap valuation. And I think that valuation is super fair for the growth that they have. This quarter's revenue was 116 million, up 66% after it grew 71. But on this 116 million of revenue, they netted 26 million. That's the crazy part. They're already profitable. They're already running at a 22 to 30% net margin, record profitability, record Q3 profits. I mean, I super deleveraging the balance sheet. Like the liabilities used to be 75% of the assets. Now it's only 57 as they're just retaining all this net cash they're making. So I love this company. EPS is supposed to get to $1.20 in 2 quarters and $1 next quarter. I mean, I can't believe how good the growth is. So that's a one I definitely add to the watch list. Just such good financials. Please do CRDO, batteries for drones. Okay, CRDO, I really want your opinion on them. Let's do Credo. This is another phenomenal growth name. Sorry if I'm missing some. What's the ticker symbol for Redwire? I think that's another drone play, I believe. So, hey, what up, Free Me? Great to see you, man. He says, how do you feel about ServiceNow? I really like ServiceNow. That's a great software name. We'll actually look at ServiceNow after this. They're a little expensive, but what up, K-Dude? So here's Credo Technologies. This is a company headquartered in the Cayman Islands. So one of the reasons why, yeah, they're headquartered in the Cayman Islands, one of the reasons their margins are so high is because of that. They pay 0% taxes, but that doesn't matter. If we just judge them off their financials, they deserve a medal. I mean, literally like a gold medal because of how good their numbers are. If we just go to their revenue right here, their revenue growth, they make like these AI infrastructure chips. Like they partner with ARM. I don't know exactly, but AI stuff. Actually, I'll pull up their website to get a better idea. But look at the growth that they've experienced for the past 4 quarters. It's triple-digit revenue growth. The revenue was 268 million, an insane record. And on this 268 million of revenue, they netted 83 million. They're the most profitable they've ever been. Revenues at a record, profits are at a record, and they have a phenomenal balance sheet. Phenomenal. They literally have $800 million of cash, no debt at all. They don't owe anyone any money. So that's a great position to be in. And the revenue is just going to continue to climb higher. Revenue is going to go from 170 mil to a 357. And that's assuming they don't beat expectations. Same with EPS. EPS is supposed to be another record, 53 cents next quarter, and another record after that. So honestly, even though this stock, I bet the forward PE is not crazy. Oh, well, a 60 forward PE, honestly, for the triple digit growth that they have, I'd certainly put this one on the watch list because the fundamentals are just so good. The growth is so good. And they have great margins as well. That's the kind of stock I like to own. So let's do ServiceNow real quick. This is a subscription model kind of software name. I wonder if there are any news recently. Nope. Or ServiceNow schedules Q4 earnings announcement on January 28th. Okay, so January 28th is when they reported earnings in 20 days. But yeah, a lot of these software names are kind of being hurt right now because they're expensive. I mean, if we go to the forward PE on this one, it's a 66. So even after this kind of dip that they've had, it's not exactly super cheap yet. It's probably at a fair price right now. Because yeah, so look at this. 96% of the revenue is their subscription revenue. So I love subscription model companies. It's all reoccurring revenue. And check out the expectations. It's just up and to the right. That's the thing. Like the expectations, they always beat on expectations and they're still up and to the right. So nothing's changed except just the sentiment around the whole software industry. And that's where you could take advantage of the dip. Check this out. They're easily making 400 to 500 million of after-tax net income. And it's just going to continue to climb higher. The EPS is supposed to hit 51 cents. So I have no complaints around this company. Actually, I like them more than Salesforce. If I were to buy the dip on a Salesforce or ServiceNow, I think I'd pick a ServiceNow. Um, they have so many paying customers that pay over $100,000 a year. Like the world works with a lot of popular companies like Uber, Kraft Heinz. Hey, that kind of looks like the Meta logo right here. But yeah, IT solutions, CRM, AI play. So pretty cool software play. One of the better ones out there, if not the best one behind like sales, like just as quality as Salesforce. What app is this? Hey, what up, Zim? This is a brokerage or if you want to get this app, it's in the link tree in my bio, the very first link there for my affiliate link. It's a brokerage called Moomoo. Hey, what up, ROG and Dollier? Yeah, hey, oh, Dollier, if you're on the YouTube stream, if you want to get this app, it's actually in the link in the YouTube description, very first link there. But if you're on the TikTok stream, it's in the link tree in my bio, the very first link there. So let's keep going here. Sony, this is the PlayStation company, Sony PlayStation. That's just one portion of their business. They're actually a Japanese company, so we'll convert the currency from Japanese yen to US dollars to get a better idea here. But Sony's a cheap valuation. On this little dip that they've had, Sony's all the way down to a 20 forward PE, and I think that is super fair. Sony's trading at 20 times net income. That's really fair. They sold 3.9 million PlayStations just in Q2 of 2025. This one they released it, they sold 10 million PlayStations. And what's cool is whenever you buy something in the PlayStation store, they keep 30% of the transactions. So really high margin revenue on top of the hardware sales. But yeah, so their game and networks, PlayStation sales are the biggest portion of the revenue. That's 35%. But then they're in imaging and sensing solutions. That's up double digits, 11% year over year to a record. It's never been over 4 billion before. They did 4.15 billion there. They're also in entertainment technology and music too. I think they have like the Avicii estate assigned to them, and a lot of popular music artists are signed to Sony and their records. They're not under the name Sony, but yeah, if we just go to Sony's net income in US dollars, they're easily making 1.5 to 2.5 billion of net income a quarter, and you get a dividend, a 0.6% dividend, but a very low payout ratio, only a 10% payout ratio. So that's why they're one of the better Japanese stocks. Nintendo and Sony, I love those two. They might be getting hurt by the memory company. Um, okay. Um, let's see. Copart, Mondelez, Hims, and Pinterest are interesting. What up, Dr. Dummy? Good to see you. I also love Sezzle. Yeah, Sezzle's an interesting one. Um, I was actually just looking at Mondelez. Should we look? Let's look at Pinterest. We haven't looked at Pinterest yet. This one's an interesting one. What do you think about Nvidia? I think Nvidia is great. We just looked at Nvidia, sadly, but we might get to them a little later. And Snowflake, I think Snowflake's a good AI play. They're really expensive though, because Snowflake can't just get profitable. But Snowflake's like the second best company to Palantir, and then there would probably be UiPath under that. So here's Pinterest. We all know that kind of social media app. I think I can understand why this stock has sadly been flat since 2019, since their IPO. Because they're expensive. Even after the dip, the forward PE is a 39. If we look at their current PE, it says a 9.5, but they had a huge one-time adjustment. So the actual real next year's net income, they're trading at 40 times next year's net income. So yeah, there was Q4 right here. It says they made 1.85 billion. They didn't actually, they did make a good 260 million that quarter though, but nowhere near 1.85 billion. They had a little tax adjustment. But here's a cool metric around Pinterest, which I do like, is their monthly active users are 600 million, when this exact same time last year was 537 million. So they're really building their monthly active users. Maybe they can find a better way to monetize it in the future. And the other best part about Pinterest is their cash on hand. They literally have $2.7 billion of cash, and $1.5 billion of that is in short-term investments, which are 1 to 3 week treasury bills, which just basically means they're earning a bunch of interest on their cash. So that $2.7 billion of net cash earns them $28 million of just pure interest a quarter just on their cash, and that's dramatically helping out their bottom line. So Well over 10%. Actually, yeah, like 14% of the market cap of what you're paying the whole company is just their net cash on hand. But yeah, 39 forward PE does seem a little expensive, but I like their cash on hand, their monthly active users growth. So it's not the end of the world. All right. Is the app you're using to show the company information you showing you now? Yes, sir. Yeah, yes, Pooney. Yeah, the exact app I'm on right now is my favorite brokerage to buy stocks on and analyze stocks. Yeah, it's the very first link in the link tree in my bio or first link in the description there. Sorry, I'm a little behind here. WLTH. A lot of people believe in NVO. I don't really. Yeah, actually, Novo Nordisk is a tough one too. WLTH. What is this one? I think they're like a brokerage or something. Wealthfront. They just IPO, so we won't get too much data behind this company, but let's see if we can. Okay, so yeah, we only have 2 quarters of data. They did 91 mil of revenue. And well, really, so on that 91 mil of revenue, they netted 35 million, and they really did net 35 million. So that's after they paid 5 mil of taxes. So their net margin is a 40%. I'm actually curious about this one to see what they continue to report. And I guess the few expectations, they are expected to stay EPS positive. So, I guess that's the negative forward PE, maybe from IPO adjustment. It's an interesting one. They just IPO'd, so I really can't give you too much data to look at in terms of financials right here. Maybe we can check out their website right here. Wealthfront, some sort of financial investing app, it looks like. Yeah, maybe like a brokerage app. So they're kind of maybe a competitor to Robinhood, competitor to Weeble and Futu. I really like the picks and shovels play. They had a great margin. Is it crazy to buy more Micron tomorrow? Not crazy, but I keep it as a very low allocation because I wouldn't be surprised to see Micron continue to climb higher. Can we go over Palantir? Yeah, we haven't looked at Palantir all stream. So actually, yeah, let me get to Palantir real quickly. Then we'll get to IBIT. Or I'm so behind on the chat here. Remind me if you got any stocks. Kind of remind me them in the YouTube chat. I'll come back to them. And on the TikTok chat too, we're reading these. Sony undervalued. Yeah, I do like that one. Jabron Lames, what's up? BMNR, that's like a MicroStrategy play. So here's Palantir. I'd love to own this one. It's has the DNA of a multi-bagger, but they're just too expensive. But they deserve a high multiple. Here's why. If we go to Palantir's revenue, 55% of it comes from the government, and the government revenue is blowing up. It's up 55% year over year. After it grew 40, after it grew 10. So literally the growth rate is growing on the government revenue. And the best part is it's not just the government revenue that's growing. A lot of police stations use their software. ICE uses them, so that's why a lot of people don't like them from an ethical point of view. The military and the Air Force, but the commercial side with other S&P 500 companies like Google, the commercial revenue is up 73% year over year. After grew 26, after grew 22, like the growth rate, it's just so good. Beating on every expectation every quarter. They're printing net income every quarter. They have no debt at all, literally no debt, fortress balance sheet. Like that's why Palantir deserves all the hype around them. They just beat on every metric every quarter, have great growth, just great fundamentals. And I love to own them, but they're too expensive for me to buy right now. Should I buy Amazon tomorrow? Hey, maybe. If I wanted Amazon as 5% of my portfolio, I wouldn't make Amazon 5% of my portfolio tomorrow, but I would maybe make it 1%. They're government dependent. Can you explain Nvidia, please? Can you explain Nvidia? Hey, we already looked at Nvidia a couple times. If you remind me in a couple minutes, we'll get back to them. I want to look at these other stocks first really quickly. I saw a YouTube video that was talking about the anchoring bias. I wonder what that means. Someone with one more share is making more when it goes up. Yeah. SoFi is another kind of fintech app. But here, what brokerage is this platform? Yeah, hey, this is a brokerage right here. It's in the link tree in my bio, very first link there. This is a brokerage called Moomoo. If you want to get it with my affiliate link, very first link in the link tree in my bio, you can just type it into Google, broker called Moomoo. So here's SoFi. This is another great growth name. Hey, we'll look at MVST. This Appo one is in the link tree in my bio, the very first link there. Then we'll get to Microvast after this. Yeah, this is my favorite brokerage to buy stocks on. It's free brokerage. You don't need, but if you deposit $100, we'll both get free stocks. But you don't even have to deposit any money to still like analyze stocks on here. A lot of people just like to analyze stocks. And another cool thing is like completely free, no commission app. You also get a 3.35% APY on your idle cash. So yeah, if you're looking to buy stocks, you need a platform. This is my favorite app. Very first link there. But anyway, let's look at SoFi. This one is another great growth name that just beats all expectations every quarter, kind of like Nvidia. So if we go to this company's financial services right here, they have their own banking charter. They got it through a loophole that's now patched because of them. Their financial services revenue is up 76% year over year, after grew 101%, after grew 141, after grew 300%. Like, the growth is insane, and no analyst were expecting this sort of growth. Check this out. The orange line is what the analysts expect every quarter, and they just beat on every expectation. They beat on revenue, they beat on EPS, they beat on EBIT. So that's why I really think people are taking SoFi serious, because the fundamentals are so good. They're making a couple hundred million net income a quarter. The revenue just hits a new record every year, every quarter. Revenue's up 40% after 30%. So anyway, SoFi is a great one, but they are expensive, and I really wouldn't buy them at their current price. It's tough at a 46 forward PE. I do own SoFi. I'm a shareholder of SoFi, so I'm totally biased, but I do really like them. Oh, yeah, so let's look at MV. What is MVST? Microvast. I might have heard of them before. Maybe ARM is also interesting. Yo, ARM is a great royalty play. ARM literally has 99% gross margins. Like, it's crazy. They just collect royalties and license revenue. So here's Microvast. So there is a forward PE. Let's actually see the EPS projections. So they are supposed to get EPS positive in 2 quarters. The revenue is supposed to go from 106 mil to 132 mil. The numbers are a little choppy, but these are great year-over-year comps. Yeah, revenue's up 22 after 26, and they're actually net income positive already. So it's a company that's not losing any money, but the profits are just so tiny right now because they're having these little adjustments. So they didn't actually lose 100 mil in net income last quarter. The core business actually made like 10 mil in net income and made free cash flow as well. So there was just some little weird one-time adjustment to their net income last quarter. Where does the revenue come from? So, oh, look at this. Italy is 40% of the revenue. Then it's China as 35% of the revenue. India then 12. So the US really isn't on here. Yeah. US is only 4% of the revenue, but there's some nice growth expectations, 30% revenue growth, and they're already net income positive, but the net income is so tiny right now that the forward PE says a 1,750. You really want to do a 1 or 2 year out PE multiple there. So I actually wish I could give you more thoughts on them, but I'm wondering what the PEG is, the price to earnings growth ratio. Oh, wait, I've seen you on Blossom. You commented on my post. Really? Hey, yeah, I appreciate that. Yeah, I do have Blossom. Nathan Robert. You can always do fractions of a share. Yeah, I love buying fractional shares. I've been doing that with Ferrari recently. Can't afford a full share, so I've been buying 0.1 shares, 0.1 shares. Like, sometimes I'll go to McDonald's and I'll get a $5 meal deal at McDonald's, and then I'll buy $5 worth of the stock. McDonald's is actually a great real estate royalty company. Fun fact, a lot of people don't know this. That's why the margins are so high on McDonald's. Whenever you go spend $100 at any McDonald's, $4 of that goes back to the parent company as a royalty. So 4% of every transaction you do at any franchise McDonald's goes back to the corporation as a royalty. And they also own the land under 80% of all the stores. So every franchise is also a tenant that pays above market rents and royalties back to the parent company. That's why they have 40% net margins. No restaurant runs like that because they're not a restaurant company. And in a recession, historically, sales at McDonald's go up, and in a recession, McDonald's acquires a bunch of cheap land. That's why the stock didn't dip in 2008. They're a unique recession-resilient real estate royalty play that does good in a recession, but also captures the upside of the economy. So anyway, I like McDonald's. They're my second largest position in here. We're only up 8% on them. Hey, what up, Nick? 5 for the food and 5 for the stock. Exactly. Yes, sir, Josh. Okay, hey, the legend Gary's in here. He loves this stock right here. This is like an outdoorsy store. It's kind of like a smaller Dick's Sporting Goods, and the sporting goods stores are actually doing pretty good right here. So Academy Outdoor, they traded a very low valuation. The PE is a 10, and the forward PE is a 9 or an 8.9. So that means the net income is expected to grow another 10%. But yeah, they sell outdoorsy stuff, apparel, footwear, so kind of like commodity stuff. What's their net margin actually? So they have a 5 to 8% net margin, pretty good. And they're making net income every single quarter always. They're always making 70 if we average it out, they're making like 80 million of net income a quarter. So let's go see how much the dividend costs. They're making 80 million of net income a quarter, and the dividend cost, wow, only 8.6 million. The dividend literally cost $8 million. So they could pay for the entire year of dividends just this quarter times two. So that super low payout ratio equivalent to a 1% dividend. So they have a 1% dividend only paying out 8 million a quarter. They could afford to pay out like 20 to 30 million a quarter and give you a 3% dividend. They're just choosing not to right now. So anyway, they're an interesting, really cheap company. They kind of always trade cheap, but deep value Shark. Hey, I'll add you on. Hey, thanks, Shark. Yeah, hey, here's my Blossom, I guess, if you wanted to follow me on here. I don't ever post on here, but yeah, here's my Blossom. You can kind of see my two portfolios. I don't really love this app, but I sometimes go on there to see what other people are saying. It's a lot of people promoting just covered calls on there. It's a really okay. Um, what should we look at here? Anchoring buying where your mind gets stuck to a potentially lower price when you first bought it. Oh yeah, so being scared to dollar cost average up. I totally get that. Yeah, like allocate new money. Okay. I'm so behind here. I do apologize here. Um, Tired said B. Oh wait, BD. Oh, tell me about it. Yeah, I know. So tired. I typed in BD stock. I could not find that one. I did try and find it. Mason said FTS stock. Let's check out FTS. Fortis. I haven't heard of this company before. Oh, I did get to Astera Labs earlier, but I can check it out again. By the way, if you miss anything, I'm streaming on YouTube. You can like rewind the stream on YouTube if you miss anything. And yo, Josh and King Louie, thanks again for those crazy gifts there, for the Let 'em Cook. Thanks for those gifts there, Josh. He says, I think the worst stock got to be FWRD. Ooh, should we look at that one? Oh, and Nvidia too. I said I'd get to Nvidia too. Well, we've been live for an hour and 59 minutes. We've been live for 2 hours, and we did a 3-hour stream earlier today. We're going to be live for probably another 30 minutes. We'll try and get to all these names here. I do apologize if I miss some of them, but that's why I only spend like 1 minute on each stock so I can get to everyone. So here's Fortis right here. They're at an all-time high right now, and the forward PE is a 19. That's actually pretty fair. Like this company, we'll look more into them, but they could potentially stretch up to like a 22 or a 24 forward PE before it really gets overvalued and could continue to stretch up. Like I love when a company's at an all-time high and the forward PE is still only like a 19. So let's see what they do. Regulated energy, international transmission. How's that doing? That's at a record up 10% year over year. Regulated energy. So maybe it's like a utility play. Fortis Energy. So let's go check out the bottom line. So they're easily making 300 million of after-tax net income a quarter. So kind of single-digit revenue growth, like revenues up 3%, 6%, 0.9. But what's the dividend here? So wow, actually, even if you buy the stock right now, it's probably up because of the commodity oil prices and the utilities are at all-time high. But even if you buy the stock right now at all-time highs, you still get a 3.5% dividend yield, on top of getting like a couple percent stock price appreciation. So anyway, yeah, I love the regulated utilities. I think that this is a regulated utility. Regul It operates through regulated utilities. It's a natural gas and electricity. So yeah, they have a 3.4% dividend. Another stock very similar to this one that I actually just bought, another regulated utility. By the way, these regulated utilities always give you 3.4 or like a 3% dividend. And then they give you on top of that 3% in stock price appreciation on average. So on average, in a total return basis, you should get 7% of your money back every year. So I actually just bought ticker symbol SO. And the way to just buy a whole ETF of these, again, I think this ETF will give you 7 to 8% of your money back a year, even if you buy it now. Ticker symbol VPU. It always does this historically. There's the COVID dip even before that, because the government guarantees them. If they don't get at least a 3% return, the government guarantees them that's return. That's kind of the cool thing about these regulated utilities. So anyway, FTS is another interesting one. Sorry if I'm a little behind here on chat. Let's actually go over Nvidia. Yo, try not to spam there. Reddit's a beast. I freaking love Reddit stock. Yeah, hey, King Alfro, try not to spam there. We'll try and get to that one. And Google, yeah, I love Google. I'll be quick with Nvidia right here, and um, CIFR. I think that's Cipher Mining. Maybe another good one can be D Local. What's the ticker symbol for D Local? We'll check that one out too. And Rocket Lab. So yeah. So here's Nvidia. I really think this company's pretty cheap. Honestly, Nvidia trades in the very middle here at a 27 forward PE. I really think that's fair for Nvidia, given the amount of growth that's expected here. Like if we go to the EPS projections, like the growth isn't done on Nvidia. The expectations are still triple digit growth. Check this out. The EPS 2 quarters ago was 80 cents. And in 2 quarters, it's going to be $1.50. So there's still massive EPS growth. Like this was already a record quarter. It's never been higher than $1.30 of EPS before. And it's supposed to be in 2 quarters, $1.55. So there's just crazy EPS growth still projected. Sorry, my Wi-Fi is a little buggy right now, as it always is. But yo, no way. Shout out to Cruz. No freaking way, man. For the crazy super chat on the YouTube stream. Dude, I really appreciate you, Cruz. If I see a shot crash, what would be your first buys? Ooh, I'll answer that after this. But yeah, check out Nvidia's bottom line after tax net income this quarter. They made $32 billion of net income this quarter, and it's again expected to be $35 billion next quarter, and then like $40 billion in 2 quarters. Like they actually have an incredible bottom line. And 50% net margins or 56% net margins. So that's why I think, for Nvidia, a 28 forward PE is pretty fair. They're growing their GPU market share. Dang, my screen really just lagged like crazy. So yeah, great market share, 24% GPU market share. They have an automotive business. They have their new Rubin chip. The CapEx of the Mag 7, like Microsoft, OpenAI, Oracle, Meta, as they're all trying to train their own LLMs, they're plowing money into NVIDIA chips. So their customers are like recession resilient because they're all the cash-rich companies. What's this app called? Yeah, hey, this is a brokerage right here. If you wanted to get this app, it's in the link tree in my bio, the very first link there, a broker called Moomoo. Yeah, dang, the bitrate just crashed. So if the stream's lagging, don't worry, it's not your fault, it's my fault. I'm so sorry here. But yeah, I do think I think if you buy Nvidia right now, you could still get 8% of your money back. Reddit was the post you commented on. You mentioned they could join the S&P. Yeah, Reddit is the highest market cap US stock, not in the S&P 500 yet. I believe Reddit's going to $300 a share this year. They'll need to do a reverse split. So if they announce a stock split this year, or not a reverse split, just a normal stock split, then they're for sure, that's confirmation they're getting added into the S&P. But yeah, if I see a shock crash this year, what would be your first buys? Well, first off, a really interesting ETF I'd buy is ticker symbol SMH. So this is the semiconductor ETF right here. I don't know what exactly is going to recover, but whenever there's a big pullback, the tech heavy stocks usually get hit the hardest. So this will be an ETF I might consider buying the dip on. But yeah, it's if you don't know which AI stock to buy, like should you buy Nvidia, Taiwan Semi, the memory shortage with Micron or Lam Research or ASML, which is at an all-time high right now. You could just buy this ETF that breaks your money up for you into all these names, so you just capture the upside. And no investor is disappointed with these sort of results. I guess this brokerage is also telling me that there's a bullish continuation triangle there. But yeah, I'd like to buy this ETF on the dip, but then just buy some of the individual names. Like I'd love to buy more. Like this is going to be a really boring answer, but sucks. But what I'd buy the dip on are stocks I already own. More of the stocks I already own. Like I'd love to buy more Amazon and Amphenol specifically. We just might not get those dips, but Amphenol, favorite stock ever. Comfort Systems, got to be second favorite stock ever. Like Comfort Systems, Amphenol, Amazon, more Coca-Cola Consolidated. I just bought more of this company as well. I bought 2 more shares of the consolidated company. So are you related to someone else on TikTok? No, I'm not. I don't know any other rental or this is my only TikTok account. But yeah, actually, let's go see if the overnight market's moving. Is anything up right now? Futu's up. Sprouts Farmers Market's up a little. But yeah, dang, AMD's down 1%. SoFi's down 2%. Reddit's down a little bit. But yeah, I do own Reddit. Reddit's a good one. Let me check out the Robinhood portfolio really quickly. Yeah, so the overnight market is down a bit. Check this out. The Qs are down 0.66, SPY's down 0.5. But I mean, literally the day before, the S&P 500 hit a super new all-time high. So I'm totally not worried about this tiny little red day. I mean, I want some red so I can finally buy stuff, because it's tough to buy anything, when that, like, here's the S&P 500 chart. Literally, like I said on Friday, it was an all-time high. So if you basically bought any stock ever, you're most likely up on it on average, but it's tough buying anything when the market's at all-time highs. So that's why I'm actually about to release a video of stocks you can buy that are off all-time highs that are still great deals. Like one of those deals I think that, feels good to psychologically buy because it's still off all-time highs. It's Microsoft at a 28 forward PE. It's still worth buying at their current price. Southern Company's pretty good at a 20 forward PE with a 3.4% dividend yield. Progressive Corp's an interesting one. ARM, even though ARM's pretty expensive still. But yeah, those are some interesting names. But yeah, hopefully that was helpful there. Being Cruz, I'd love to just buy more of what I already own. I'd love to build more shares up of Amphenol, Amazon, Comfort Systems, and even Powell Industries. If Powell ever gets, even though Powell is a pretty good stock, even now. Oh, let's go ALAB. My bad there. So my apologies there. Yeah. Um, Let's get to Astera Labs real quick. So this is a great and look at the LVMH. What up, Peter? So LVMH stock, a lot of people are hyping Iris Energy, Nebius. Yeah, those are the data center stocks. I think Nvidia owns those. Or no, Nvidia owns Nebius and APLD and CoreWeave. We'll actually check out the Nvidia portfolio. And Intuit, I love Intuit, great software kind of tax name. So here's Astera Labs. This company, again, another one that deserves a medal for incredible fundamentals and growth. Like they deserve all the hype around them. The revenue's grown triple digit for the past 7 quarters in a row. The revenue's been up over 100% every quarter. So the revenue is 230 million this quarter, and on this 230 million revenue, they made 91 million net income. Like they really are the most profitable they've ever been. So net income's hitting a new record every quarter, revenue's hitting a new record every quarter with a fortress balance sheet, no debt at all. These are the kind of growth stocks I pay attention to and have on my watch list because they're the kind of stocks that just continue to climb higher in the long run. No debt at all, $1 billion of cash, the cash is earning interest, beating on every expectation. Like revenue expected this quarter was 206, they did 230. They expected 23 cents of EPS, they did 50. So there's such good growth expectations here. But the sad news is they are really expensive, trading at 38 times just revenue. So not like 38 times forward PE, but 38 times current revenue. And then the forward PE is 100. But they deserve this high PE because they just got net income positive. Literally exactly a year ago, they weren't making any money. But if you annualize this quarter right here, like 400 million net income a year, then it starts to get to a more reasonable valuation. So HV 2-year out PE multiple on Astera Labs. Great growth name. Zero complaints about there, except it might be slightly expensive. But yeah, I love that company. Is Reddit too late to get into? Pretty much. A lot of people think Reddit's a meme stock, but this company is no meme. If we judge just Reddit for the fundamentals, we judge the company all just off their financials, this is a phenomenal stock in my opinion. Simon said, what app is this? Yeah, Simon, this app, it's a brokerage. It's in the link tree in my bio, very first link there if you want to get it. Brokerage called Moomoo. But check out revenues, the Reddit's revenue. It's up 67% year over year. After grew 67%. After grew 21%. After grew 13%. So the record, they actually make their ARPU, they make $4.20 per user. So the revenue is 580 million, and they made a record net income, 162 million of net income. They're actually getting now revenue from not just advertising. You get such good ROAS, you get such good return on ad spend on Reddit, like way better than Meta ads. Like they purposely, Reddit right now gives you a really good return on your ad spend, and they're building up their advertising revenue like crazy, but they're also receiving money from LLMs, like Reddit explores AI data licensing deals with major tech companies. So their other companies are training their LLM on Reddit's data, on Reddit's and that's another stream of revenue for them. That's all 100% margin. And check out the balance sheet. Another company with just no debt at all, no debt, lots of cash earning interest. These are the kind of stocks I want to own. And they beat on EPS projections. Like EPS is going to go from 13 cents to 50. So they're going to consistently be making 100 million net income. They're worth $45 billion. I believe they're going to get added into the S&P 500 this year, get to $300, but it's probably tough. It's definitely tough to buy it at its current price, but they're no meme. They have great fundamentals. They really do. What app are you using? So cool. Yeah. Hey, Daniel, if you wanted to get this app, it's actually in the link tree in my bio, the very first link there, or it's in the link in the description on the YouTube stream. It's actually a brokerage called Moomoo. If you want to use my affiliate link, if you go and deposit $100, we'll both get some free stocks. But yeah, it's my favorite app to buy stocks on. And my internet just keeps on. There we go. Okay. It went out, but then it came back. So sorry if it's lagging. It's my fault, but okay. CIFR. Yeah, let's get to CIFR really quickly. Um, Please take a look at SIDUPL or SIDU. Okay, we'll look at SIDU as well. And Lockheed Martin. Lockheed Martin is an interesting aerospace and defense play. So yeah, let's check out Cipher Mining right here if the Wi-Fi allows it. And my battery's getting low today. This has been fun. We've been live for over 2 hours and 10 minutes. By the way, if you want to hit the follow button, we stream every Sunday at this exact same time. We stream every Sunday and we stream every day. And please watch out for people impersonating me. I sell absolutely nothing. I have no course, book, WhatsApp. I don't coach. There we go. I had to recast it to the screen, but we're back. Yeah, please watch out for people impersonating me. I'll never follow you, DM you. The only thing I have is a YouTube channel. If you wanted to subscribe to my YouTube channel, it's called Nathan Robert, link tree in bio. But yeah, very first link or third link there for my YouTube channel, but you can just type into YouTube Nathan Robert. I'm also streaming on there. So here's Cipher Mining. It looks like a Bitcoin mining company. Let's see. So yeah, look at this in the middle here. 100% of the revenue is their Bitcoin mining revenue. But yeah, so something just happened to their balance sheet. So they used to have no debt at all, but now they have a bunch of debt. Did they like buy an asset? I don't know. So something just happened, but it's led to a lot of growth. Like this stock has outperformed Bitcoin. So I wonder if they're doing what Iris Energy is doing. Basically, this company just owns a bunch of Nvidia chips in a data center, and it's mining Bitcoin right now. What they're doing is they're converting it from Bitcoin mining to cloud hosting. And I wanted to see if there's maybe any news around that. But yeah, APLD strong. HP. That's what APLD did too. They're renting out the capacity of their GPUs. So anyway, I wish I could give you better thoughts on them. I guess you could see what the market cap is. Their market cap is 6.5 billion. You could ask. I guess we could ask the Moomoo AI here. Well, what's the NAV of Bitcoin holdings here? You know, I'm gonna forget to look back at this, but well, anyway, we'll come back to that in 10 seconds. Anyway, there's Cipher Mining, some sort of Bitcoin mining company. I don't know. I wish I could give you better thoughts on them. Okay. What was that stock? SIDU stock. Let's check this one out. Cetus Space. So it's a very small market cap. So yeah, be careful with these. They're only worth 218 million. So that's a very small market cap. So yeah, they're at basically an all-time low. So the whole company's worth $218 million. And and look at this. Over in the past year, they've lost over 20 million of net income. And 200 mil market cap, when you lose 20 million, that's 10% of the entire company. So that's the one risk here. That's probably why the stock has really been struggling, because there's high kind of bankruptcy risk here. If you kind of think about it just logically, you buy the whole company for 200 million, you're buying a company that loses you 20 million a year. And also the revenue isn't too good. The revenue was 1.3 million and the revenue's down 30% year over year. So the revenue growth isn't there. The net income is bad. What's the expectations though? So there is no analyst covering this one either. So there's no analyst covering this one. So yeah, that's a micro cap. I'd just be super, super careful with. That looks like an interesting swing trade. I don't think I would like buy and hold that one for the long run. So what's Volkswagen ticker symbol? Is that like an international name? So let's actually pull up Intuit. Then we'll look at, I have not looked at HII. What up, Dylan? We'll look at HII. I have not looked at that one yet. So here's Intuit. This is TurboTax. Every tax season they print money. A great software name. Then they're expensive, but they certainly deserve a high multiple like this. So the forward PE is a 39, but in the current PE is a 44. So there's a lot of EPS growth expected over the next year. But yeah, Global Business Solutions. This is not the tax business, but this other business is growing phenomenally, up 18% year over year, after grew 9%, after grew 17, after grew 37. So they're on an absolute streak of growth. But then they have this consumer, your average consumer doing TurboTax or whatever, every single tax season. That's when they had this huge spike in revenue. So yeah, when we kind of average it out though, if we just look at their total revenue, check this out. It's up 18% year over year. Like, these are great growth metrics. And on this 3.8 bill of revenue, they netted 450 million. And they really did. And this is their best quarter. They made 3 bill of net income. Tax time, when this exact same time last year, they did 2.4 billion. So they've really fixed their bottom line. Like, they used to make a lot of net income in one quarter, and then it kind of would go negative. But now it's like all the other quarters are very consistent as well. So great. I guess we get better to look at their annual net income. Yeah, look at the annual net income for the fiscal year 2025. So the past 12 months, it was 3.8 billion, up from 3 billion, up from 2.3. So yeah, the bottom line is up and to the right. The software is up and to the right. So I really like that one. Probably slightly expensive at a 39 forward PE, but they deserve it. And you get a 0.67. Oh man. 0.67% dividend yield there. So 30% payout ratio. They raise the dividend every year. So there's your kind of your consumer tax software play. They kind of have a monopoly on that, you know. How's it been? I'm watching FIX, KNSL, Race. Yeah, hey, Race is my favorite. So someone was saying Volkswagen. Maybe we'll find that ticker symbol. I don't know, but Ferrari has crazy margins on their cars. So here's Huntington Ingalls Industries. They are at a crazy all-time high. So if you've ever bought this stock, you're definitely up on your money. Let's go see what this company does because I actually don't know. And here's why the stock actually might go higher. You know, the forward PE, even though the stock is at an all-time high, the forward PE is a 23. You know, I think it could potentially go up to like a 25 or a 28 forward PE. Oh, there we go. That could potentially, you know, send this one up another, you know, 10, 20%. So Newport News. So maybe they're like I don't know if that means like they're actually a news station. I don't know. But they're also in Mission Technologies. How's that growing? That's up 11% year over year after it grew 3.5%. And the Ingalls revenue, I'm not sure what this is, but that's up 25% year over year. So when we blend all the businesses together, the total revenue is up 16%. So the growth is back. That must have beat expectations. Yeah, this was a big beat on expectations. That's why they gapped up and have gone up so much on earnings day. Check this out. Analysts expected this quarter 2.94 billion of revenue, and they reported 3.2 billion. So they beat on revenue and a massive beat on EPS. They expected 336, they did 360. So this really was a triple beat quarter. They beat on every metric. So no wonder they're at all-time highs. 23 forward PE implies that they might even continue to climb higher. So there's Huntington Ingalls. Really good financials there. ACM stock. What is AC? I cannot. Oh, wait. We just looked at Amcom Technologies. Amcom is actually an interesting one. I'm surprised. I've never heard of that stock before today, and two people said it. All right, we'll actually come back to that one in a minute there if you remind me. Oh, here's a stock I said they would not recommend buying, and it's just purely because of the financials. This is your Leaf play. I think you know what I'm talking about if you own the stock. This is a Leaf stock, and I just don't love this industry, first of all, as an investment, but I'll just kind of keep it really simple here. Here's why this stock is at all-time lows and why I really wouldn't buy it, sadly. If we look in the top right, how much the whole company's worth, they're worth $1 billion or 1.07 billion. And just kind of think about this very simply. The whole company's worth $1 billion, 1.07 billion. You're buying a business that lost 1.27 billion earlier this year, and then 800 mil, and then 80 mil. So they've been losing a lot of money in the business. You know, the top line isn't really there either. Revenue's up 3%, 4%. So it's tough. And whenever you lose net income, like whenever you lose 1.27 billion, that money has to come from somewhere. So look what happened 2 or 3 quarters ago. Their basically cash went from 3.4 billion to only 2 billion, because whenever you lose net income, that money has to come from somewhere. So the balance sheet has been on this massive decline. So what's the forward expectations though? So they're actually supposed to make EPS in 2 quarters, 5 million of EBITDA. So maybe the worst is over. That could be the thing. Maybe the worst is over, but I'd just be super careful. I wouldn't trust too much money in that name. What website do you use? Oh yeah, this is this actually a brokerage right here, Wavy. If you want to get this website or this brokerage where you buy stocks on it. Oh, well, right as I'm going my little explanation here, they take down the stream because they think I'm AFK. Okay, sorry. TikTok made me fill out a CAPTCHA because I thought I was AFK. Anyway, if you wanted to get this app, it's in the link tree in my bio, the very first link there. It's a brokerage called Moomoo. Josh said, he says it's the worst stock ever. He says FWRD, it's horrible. So here's Forward Air. Let's check it out right here. Let's see what he says. An $845 million company, and they so this is not good. A really leveraged balance sheet. They got 2.6 billion of debt to pay, and the whole company's worth 800 mil. And the whole company's worth 800 million, and they lost like over 100 million, well over 140 million in net income, which is 20% of the market cap. So they've lost 20% of the market cap just in net income. And for all of eternity, they've kind of lost a lot of money. And the revenue's negative. So negative 4% revenue, losing a lot of the market cap, really leveraged. So yeah, this is a recipe of like a stock, you really just wouldn't want to buy the dip on. Um, so yeah. A firm, buy now, pay later. Yeah. They operate the only shipyard for the U.S. military. They were forced divestment from NOC, forced from Northrop Grumman, HII. Oh, really? So Huntington Ingalls Industries is the company. Someone says they're the only shipyard for the U.S. military, forced to divest from Northrop Grumman. Northrop Grumman's a good stock, but yeah, they're at an all-time high. They've actually done phenomenal. So actually, let's get to ADUR. Forgot to get to that one. ADUR, and then a firm. It's a buy now pay later. So I can do Google and Microsoft. Yeah, I definitely want to get to Google and Microsoft. I love both of them. So here's a Duro Clean Technologies. They just IPO'd, so they've only existed for a year. Another really small one. They're only worth 430 million. They're a Canadian company, so we'll kind of convert that to US dollars. Revenue isn't there. So yeah, no revenue yet. The revenue's only 30,000, down 20%, and they're losing 5 mil in net income. They have a good balance sheet, but was that from that must be from dilution? Yeah. So every quarter they're diluting more than what they lose. So it kind of counters out the balance sheet. But yeah, nothing's really blowing me away. No revenue. Are they expecting revenue? So no, not really. They're expecting only 35K revenue. So yeah, I'd be super careful with ADUR because they just IPO'd and hey, New York, good to see you, man. I hope you're having a great day. Let me get to Microsoft first because I do think Microsoft, out of all the Mag 7 you could buy the dip on right now, I think Microsoft is the best. And hey, Emmanuel, thanks for that gift there. I appreciate that, Emmanuel. So Microsoft actually trades at a 29 forward PE for a behemoth Microsoft that literally every S&P 500 company uses in one way or another. That's a very fair valuation. AI Toolkit, they have the right to buy 49% of OpenAI. Copilot's big. Microsoft is always innovating. Let's see if there's any news here. Microsoft completes acquisition of AI data engineering platform Osmos to enhance the Fabric ecosystem. Microsoft launches AI solutions. Analysts highlight Microsoft Azure Cloud's growth advantage. Microsoft powers with Hexagon Robotics to develop AI-powered humanoid robots. I think robots are going to be big, but super commoditized. So like a lot of Tesla's forward PE is priced in from robotics, but I think it's going to be really commoditized and they won't make as much. But anyway, if we go to Microsoft right here, there's software. I love software companies, and think of OneDrive, Office 365. This is that software revenue. It does over 120 billion of annual revenue, and that's just that software revenue. On top of that, they have their intelligent cloud, their Azure cloud, that did a 30 billion of revenue just this quarter, and also does over 100 billion of annual revenue. And look at the EPS projections. It's literally just go up to the right. EPS is going to go from $3.21 to $3.91. It's supposed to be $4. And so they really are at like a 28 forward PE. And if we go to their net income, they're easily making an after-tax real net income 28 billion a quarter, or 100 billion of after-tax net income a year. They have a better credit rating than the U.S. government. So Microsoft has a higher chance of repaying their bills than the U.S. government does. They have 82.5 million premium subscribers, up from 67 million, and they just rose their prices on the Office 365 for the first time in like over a decade. So there's a lot of tailwinds for Microsoft that I think it's just worth nibbling and dollar cost averaging into Microsoft, even at their current price. They're well off all-time highs. 29 forward PE is super fair. I don't get that. Wait, what did I say there, Louis? So Affirm is cool. I also says, let's actually get to Affirm real quick. So yeah, if you're looking for a buy now, pay later stock, then we'll get to Datadog and Google and some of these other ones. Affirm is a buy now, pay later stock that just got profitable. Now, I do think in a recession, these will probably get smoked as, people just don't pay back these loans, but they're actually originating the loans and then now selling them. So they're making some good money on that. They've really been beating on expectations recently. Like analysts expected this quarter 880 mil of revenue, and they reported 933, a big beat. They're supposed to do $1 billion of revenue next quarter. The EPS is now finally positive every quarter. So if we go to their net income, we zoom out to last year, it was a tough buy. They were losing over 100 to 200 mil of net income a quarter. But now for the past 4 quarters, they're making net income every quarter. So that's what I really like about Affirm as a business. So I'm not a fan as a consumer of doing buy now, pay later, but the actual fundamentals of the business is like the best ever, and the expectations as well are really good. So they're right now currently really expensive at a 72 forward PE, but that's really because they just got EPS positive. But I can see why the stock is done so good because they're beating on all expectations every quarter. So yeah, let's actually do Google real quickly. So the behemoth Google. Can you Adobe? Yeah, Adobe. Yeah, hey, Wavy, you said what platform? If you want to get this platform I'm on, it's in the link tree in my bio, very first link there. It's a brokerage called Moomoo. You can just type it into Google, though, broker called Moomoo. But yeah, if you want, it's my affiliate link tree in bio, first link there. And hey, Poppy Ganj, GAN, appreciate the gift there. If you got a stock, give me a look at, let me know. So here's Google. Google is actually pretty cheap as well. Like, this is the thing. Even though Google's at an all-time high right now, they're actually cheaper than Amazon and Apple in terms of paying for growth. They're at a 30.8 forward PE. That's not crazy, especially for all the partnerships Google has. Google just partnered with Walmart. So Walmart is now on the Gemini platform, and Google will get a commission for that. I actually just had I had a screenshot. You know, I don't even think I should bother looking for it. Yeah, here was a crazy Google thing. Google just has, this was all today, like Papa John's partnership, Kroger partnership, Honeywell partnership with Google. Like Google has so many partnerships right now. It's actually crazy. Yeah, and Google, cheaper forward PE than Apple and Amazon. But anyway, yeah, Google 30 forward PE. They own YouTube, which we're on right now, big advertising play, advertising search play, AI play with Gemini. They're the third largest cloud play, third largest market share. That does over crazy amount of revenue. It's up 33% year over year, up to 15 billion. And they just acquired Wiz. They're going to be a top 10 cybersecurity play after that acquisition. If we go to their bottom line, Google easily, they own Waymo, quantum chips, TPUs. I mean, the list goes on for what Google actually does. They have a whole list of companies. They're in smartphones. The Google Play Store makes so much money. You spend $100 in the Google Play Store, they keep 30% of every transaction as a developer fee. But check this out. Google owns 7.5% of SpaceX, and SpaceX is trying to IPO at 1.6 trillion. That's over 100 billion of revenue for them. They own Waymo. Anyway, Google nets 25 to 35 billion of after-tax net income a quarter. What is Google doing with all that money? Well, they pay a dividend, and that dividend only costs 2.5 billion. So that's why they're a great dividend growth in the company. And hey, Edzilla, good to see you, Edzilla. Happy New Year. It's been a minute. But yeah, Google's has a dividend. It only costs 2.5 billion, and they do share buybacks massively. And they're doing 11 to 15 billion of share buybacks. They've recently slowed down the buybacks because they're investing so much in AI. If you go to their cash from investing activities, it's the highest ever. They're spending the most amount of money ever on investments, which is what I love. They're investing in the future. You can't bet against Google. They're basically a mini OpenAI. Google is a mini OpenAI in one. They're the second largest market share right behind it. Google Gemini 3.5 is actually smarter than the best version of ChatGPT. I love Gemini. I use it over ChatGPT. Their cash from operating activities was 48 billion. So they can easily afford these investments. So anyway, Google's a behemoth you can't bet against. And even at current prices, it's not crazily overvalued. Yeah, they're in advertising revenue, traffic acquisition costs. So yeah, 30 forward PE. I am a shareholder of Google. So full disclosure, I'm totally biased here, but I own Google for a reason. And they actually grew to my largest position. But yeah, we're up over 101%. And I'm not trimming or selling a single share of Google because the valuation isn't nuts. And why would I trade it for cash? They're just so quality. I'll regret it in the long run. I'll certainly regret it. And that's actually why I made this portfolio right here. It's called our buy never sell portfolio because some of my biggest regrets are selling out of great companies. Like I completely sold out of Palantir. I sold almost all my position of Robinhood. I only have 5 shares left of Robinhood. We're up 8x on it, but we sold most of our position for a 2 to 3x. And now I kick myself. And a lot of other names too. Like I sold some SoFi. So, I have this whole portfolio right here where I never sell my stock. How's them oil stocks after the big Venezuela meeting? Yeah, oil stocks have actually been doing great. My favorite in terms of the growthiest oil stock out there, I think the growthiest one is going to be MUSA, Murphy USA, but because they have such a low dividend. They have such a low dividend payout ratio that they do massive share buybacks. But another great just oil and gas play is ExxonMobil and Chevron. Warren Buffett owns it. Here, if we go to Warren Buffett's portfolio right here, Chevron is 6.4% of his portfolio. And yeah, here was kind of the Venezuela news. They've gapped up on it. And you don't buy this to outperform the tech-heavy S&P 500. You're not going to outperform the tech-heavy S&P owning Chevron. But what you do get every year is a qualified 4.2% dividend. So you basically get paid to own this one. It's a commodity type stock. But you're waiting for those little catalysts, like whenever there's war fears, inflation fears, and the safe haven assets or random Venezuela news like this. In these times is when it's like nice to own this as like a small little bit of your portfolio. You don't want to have it as a super big weighting though. But yeah, I do like having oil as a small percent of your portfolio. Hey, no way, James. I appreciate that. He says you're doing great. Thanks so much, James. I really appreciate that for the kind. I'm actually going to give you a follow. I appreciate that. But yeah, if you got a stock you want me to look at, let me know there. And also watch out for people impersonating me. I never follow anyone. So this is my only TikTok account. I'll never follow you or DM you. I sell nothing. I have no course, book, WhatsApp, nothing like that. So BULL for the long-term Weeble stock. You know what? Let's actually go over Bull. I actually do own this one in my Roth IRA. It's kind of like a smaller Robinhood stock. I own Robinhood and I own SoFi. I love the whole picks and shovels industry. Every time you do a stock trade or a crypto transaction or a prediction market, these brokerages just print a little net income margin fee on that. And Weeble is this platform right here. So I'm on this platform right now. It's called Weeble. I've been using their platform for many years. Our open profit and loss, we're only up 19% all time in here. But Weeble, I've had them for many years, and they just added this feature. Well, not just added, but right when they IPO, they added in crypto to the app and this prediction market stuff. And whenever you do a prediction market, they keep 2% of the entire transaction. Whenever you do crypto, they keep like 0.4. So that creates them a lot of high margin revenue. And they didn't have this stream of revenue, 6 months ago. So that's why I'm a little bit more bullish than the analysts even are on Weeble. And that's why I bought a little bit of them. But that being said, Weeble's not cheap. Even after the stock has dipped all this amount, the company is still expensive. The forward PE is a 61. They're just now getting net income positive. So you really want to look at that. But I love the growth. Revenue's up 55%, and I think it's going to grow even faster with this prediction market stuff. And they added in Weeble Premium, where I don't do this, but you can pay them. They're just like Robinhood Gold. You can pay them $4 a month, but I don't do that. And they give you a little APY on your cash. But yeah, I own Food too, which that's the favorite of the three picks. Is actually Moomoo stock, ticker symbol FUTU. FUTU is actually this brokerage right here, publicly traded. This app I've been using this whole time to analyze stocks on. This app I'm using right here, this black and orange one, is also publicly traded under ticker symbol FUTU. And this is my favorite pick. It's in my opinion, a better pick than Robinhood and Weeble. It's a cheaper valuation and has more growth. Check out the forward PE in the middle, a 14 forward PE. You're not going to believe this. So yeah, this brokerage I'm on right now is this app right here, publicly traded. Even if this company were to go bankrupt, you're still FDIC insured. But it's good to see that the brokerage I'm using, they print money. They made $413 million of net income. But yeah, check this out right here. They make a lot of money from interest income. The interest revenue is up 79% year over year. Basically, if you look in the middle of my screen, they give you for free, cost nothing, a 3.35% APY on your idle cash. They give you this for free because on the idle cash, they earn like a 4% APY on the idle cash, but they give you 3.35% of it and they pocket the difference. So that's the interest income. They also just collect normal commissions. That's up 90%. Like that's what I'm saying, crazy Robinhood type growth. Then they also had this other income because they just added crypto to the app, and that's experienced triple digit growth for the past 4 quarters. So the EPS projections are up and to the right. Like that's what they're using for the forward PE, this $3 EPS number, these orange lines, and they always beat by massive amounts on all their numbers. So that's why I think there's even more upside for Futu. Someone said, I am down so much on Futu. How are you down? Well, here's ticker symbol FUTU. Unless you bought it at 202, you're not down too much if you own this company, or if you bought the stock at all-time highs, you're not down too much. And I think this company is a type of stock that's easily going back to all-time highs at a 15 forward PE. This app has 28 million number of users, up from 24 million. Their client assets are 160 billion. So yeah, I really like this brokerage. Oh yeah, if you just wanted to get this app I'm on for instead of buying the stock, use this brokerage. I have an affiliate link for it in the link tree in my bio. That very first link there. Yeah, if you wanted to get this brokerage I'm on. My favorite app to buy stocks on. It's free. There's no commissions and great analysis tools and the nice a lot of people just buy it or get it for the free idle yield. You get a 3.35% APY on your idle cash. So, all right, we'll look at a few more stocks here. Um, uh, a HAL. What is HAL? This is Halberton. So Hey, what up, Connor? We'll try and get to IESC here. Dan, we've been live for 2 hours and 40 minutes. And thanks again, James, for those gifts there. Yeah, 14 forward PE is pretty good for the growth that they have. So here's Halberton right here. They're a $27 billion company at a 15 forward PE. So that's actually a pretty cheap forward PE. They had a massive beat on earnings this quarter. Actually, let's look at it down here. So revenue expected was 5.4 bill. They did 5.6 bill. So they beat on revenue, and they beat on EBIT as well, the earnings before interest. So it looks like they had a little one-time adjustment to their net income. It says they made only 20 million, but that was a one-time adjustment. They actually made 780 million. So the revenue did decline 1% year over year, but that still beat like crazy the expectation. The expectation was for the revenue to fall like 10%, but it didn't. It only fell 1%. And that's why they gapped up right here so much on earnings day, because it was such a surprise to the upside. That's why if we zoom out on the weekly chart, yeah, yikes. So look, so Halberton's stock is technically the same price that it was in 2005, but I think the reason why they gapped up so much on this specific earnings report and has been up ever since because the sentiment has really changed. So I'd still be careful with this one. Hey, you get a nice 2% dividend yield, but yeah, 15 forward PE is cheap, and there actually could be real upside there. Oh, it's a commodity stock, so completion and production, drilling company, so it looks like an oil and gas crude oil company. Yeah, energy company. Hopefully that was helpful there. Bitcoin and Ethereum looking good. Oh, wait, really? Finally exited all my crypto positions, looking for slow and steady growth this year. Yeah, hey, I always recommend that. I actually own no crypto, but I love, stock. Whenever you buy a piece of a stock, it's like a literal living, breathing piece of the company that literally, if you go to the EPS right here, like this share literally makes $1.50 of money, of net income per share per quarter, and they can basically do whatever you want. You're basically trusting the company to reinvest this money for you and do things with it. Sometimes they pay dividends, like a boring stock like Waste Management. It's a great one, boring but effective. You should get 8%, 7-8% of your money back, kind of AI proof Waste Management here, plus a 1.5% dividend. So let me check out IESC really quickly. What else, Connor? So this one's actually on my watch list. Whoa, this company is at an insane new all-time high. They've had massive stock price appreciation over the past year. So let's go see if we can figure out what happened here. I'm assuming really great financials. So let's pull this up. So is this like okay, so they're very diversified. They're in residential and then communications revenue. And look at the annual revenue growth on the communications revenue year over year from 2024 to 2025. It went from 776 million to 1.14 billion, a 50% increase on the communications revenue. Let's see, the infrastructure solutions. Also, look at the year over year growth. That's what you want to see. So this is actually a phenomenal growth company. No wonder this stock is at an all-time high, because the fundamentals are just up and to the right. So the infrastructure revenues at a record, commercial and industrial revenues at a record. How about residential revenue? That kind of flatline. So it's really the growth has been from this communications business, which is just seen. Yeah, look at the just quarter over quarter, 52% year over year growth after 29% growth after 8%. So the growth rate's growing. So let's see the expectations. Yeah, they beat like crazy, and the expectations are up and to the right. Same with the EPS. Massive beat on EPS this quarter, expecting $3.10. They did $4.90. So I can tell it's always the financials that explain why a stock is either, it explains why a stock is either massively gone up or massively gone down. Like it explains why Lucid's at all-time lows and this stock and Palantir are at all-time highs, because the financials are so good. So anyway, yeah, the net income's up 56%. So look, the revenue's up 15 and the net income's up by 50. So what does that mean? That means they're expanding margins. The net margin went from 8.5 to an 11. So IESC has great fundamentals there. I really do like that one. MLKN. What is this one? What's up, Maurice? How's it going? So this is Miller Knoll. I've actually not heard of this company before. They're worth 1.3 billion, and they look pretty cheap on a forward PE there. What was the forward PE? A 10. So they're literally trading at 10 times next year's earnings. What do they do? North America contract revenue. Let's go to their let me actually just go to their website right here. Miller Knoll, healthcare seating rooted of 70 years of innovation. So they make walking sticks and canes, or something like that. So maybe some sort of medical company. I don't know. Investor relations. So let's actually go check out your furnishing, fixtures and appliances, chemical fiber. So what's their revenue? So the revenue is actually slightly down year over year. The revenue is down 1.5%. So that might be why the stock has kind of been not doing too well. The revenue growth is negative year over year, and the profits are really choppy. Like if you go to the net income, like it just doesn't look great. Like the past 2 quarters, they made money, but then they lost net income. So they're not net making any net income. They used to make a lot more consistent net income, but now it's like kind of gotten a little worse, and the revenue's now negative. So that might explain the struggle behind the stock price. But they have been up and to the right. Like this earnings report looks like it was really good. The stock's been up ever since. Um, hmm. I don't know here. I wish I could really give you more thoughts on this one. I apologize. But expectations are actually the EPS projections are good. So they're supposed to stay net income positive every quarter. So that's the good news. And they did, yeah, they did beat on revenue good this quarter. Huh. Interesting there. Ooh, RDCM, a small but decent growth stock. Let's see, RDCM here. Not Broadcom, but Rodcom or Radcom. What about Dave? Hey, Dave is super cheap. I love Dave. So here is Radcom. This one, yeah, dang. So this stock is the same price that it was in 1999. So you bought the stock in 1999. It's the same stock price that it is today, and they've never paid a dividend either. So that's a bit sad. What platform do you use? Yeah, sorry, the thing just disconnected and reconnected. Sorry, I don't know if it cut me off, but yeah, if you want to get this platform I'm on, Heart there, it's in the link tree in my bio, very first link there. This is a brokerage where you buy stocks on, my favorite app to buy stocks on. Brokerage called Moomoo, very first link in the link tree in my bio. For my affiliate link, you can just type into Google though, broker called Moomoo. But yeah, let's see right here. Broadcom, they're only worth $200 million. They do services and products. The products revenue's at a record, and the did that? Okay, sorry. And the services revenue is also at a record. So let's pull this up. It's again really small numbers here. Like the total revenue is only 18 million this quarter, but on this 18 million of revenue, they actually this is really good. They netted 3.4 million, and they really did net that. So actually, here's the thing. And of all the companies out there that are worth 213 million, because I don't really like these kind of companies worth 200 mil. Out of all the companies worth 200 mil, I want to buy the company that's actually profitable, making a couple million of net income a quarter. Because what you see a lot of the times is that such a small market cap, they're usually not net income positive yet. But this one is. The revenue's growing double digits, and they're net income positive already, and a good balance sheet. I mean, that's a really good balance sheet. $106 million of cash and basically no debt, like 9 million of total debt. So basically they have 90 million of net cash, and the market cap is 213 million. So literally 40 to 50% of the market cap is just their net cash on hand. Actually, Rodcom has really good financials there. So let me pull up Dave right here. I do own this stock right here, and I'm not selling or trimming any shares because even though the stock is up massively, like this stock has seen massive stock price appreciation, they're kind of like Sezzle, where the forward PE is really cheap. They're only at a 19 forward PE, so that's really fair. And they're super profitable. The revenue this quarter was 150 million. On the 150 mil of revenue, they netted 45 mil. This was a one-time adjustment. They didn't actually make 92 mil in net income, but the core business really did make like 40 mil in net income. Record profitability. So the forward PE, they're really trading at literally 19 times next year's net income. Extreme deleverage right here. The liability ratio was 42%. Now it's only 32. The free cash flow is another phenomenal thing here. 80 million of free cash flow. The free cash flow per share is absolutely phenomenal. So anyway, Dave is a cheap company. I wouldn't really trim or sell this one, and I do own them. I'm up massive on them. We only have 4 shares. But look at this. We bought them when the stock was at an all-time high. There's the buy order right here. We bought all our shares on this day. And that was, at the time, it kind of looked crazy. Like we saw the stock go from $5 all the way up to, 78. But I'm like, this stock is going to continue to go higher. And now it has. And I think it's still, again, going to continue to leg up higher again. Um, let's see right here. A good video idea could be best quantum stocks. Quantum stocks, I do have a little watch list here. I have a quick comment on my favorite quantum stocks, I'd stay away from the, QUBT, RGTI, QBTS. I kind of stay away from those. The ones I'd buy, actually, the ones that have the money and the talent, is Honeywell, Google, and IBM. Those are my three favorite quantum picks. Like I hear a lot of hype around RGTI, Rigatoni, but here's kind of why. Well, you can't buy this company, in my opinion. The company's worth $8 billion. First off, like we just looked at ticker symbol Dave, that makes 50 mil in net income a quarter. They're worth like 3 billion. This company's worth $8 billion. And here's what you're buying. This company's worth $8 billion, and you're buying a company that literally did 1.9 million in revenue, and the revenue's down 19% year over year. So no revenue. They made 1 million in revenue, down 20%, and they lost 200 mil in net income on that as well. So there's no fundamentals here that justify the momentum. And that's why this one is so far well off all-time highs, because there's no fundamentals to justify the momentum. And I think this one will probably slowly go down. But anyway, like Google, Intel's decent but Honeywell's a great one. Hey Juan, no way. Yeah, we did Sundays are the day I'm the most active. We did a 2.5 hour stream earlier today. Now we're doing another 3 hour stream. So yeah. If you wanted to follow button, we actually stream every day, sometimes twice a day. This is our second stream of the day. I sell nothing. I have no course book. We literally just talk about stocks. And if you wanted to support me, the only way to support me is subscribe to my YouTube channel. I'm trying to build up my viewers on there. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. But you can just type into YouTube Nathan Robert. And if you're here, please drop a like for me. So anyway, here's ARM. We'll go over this one really quickly. Good to see you, Luffy. Spotify's another interesting one, an APLD. So ARM is actually a royalty company. A lot of people don't know this, but and literally every Apple iPhone now has an ARM chip in it. But yeah, look at this. On ARM, 63% of the revenue is their royalty revenue, and the other half is their licensing revenue, and it's all pure margin. So if we go to the gross margins right here, these are Reddit type margins, 97% gross margin. It's incredible. And they had a big beat on earnings. So this quarter, they expected 1.06. They did 1.135. It was a good beat. And the revenue expectation is up and to the right. Same with the EPS as well. And they made good net income. They're making a couple $100 million of net income a quarter. But this forward PE is still expensive. ARM isn't a steal of a deal, even on the dip, 101 forward PE, but this is the kind of quality stock that deserves a high PE. Big AI play, royalty play, high margin company, great business model. And there's I guess the app is telling me there's a bullish continuation triangle and 95% rise probability. So maybe I nibble on it at this price, but I wouldn't full size position it. Like if I wanted ARM as 5% on my portfolio, I wouldn't make it 5% today. I maybe make it 1%. Does WLY deserve a high PE? What is WLY? John Wiley and Sons. So let's check this out right here. Can you do, I forgot to get to some of these. Quantum is still in baby. In 5 years, it'll pay off. Yeah, there's a lot of future hopium to pay on some of these smaller cap names, but there are some great quantum names. Ooh, we'll look at TKO too. So here is John Wiley. I haven't heard of this company. They're kind of at an all-time low. Or dang, this stock is the same price that it was in 2004. So you bought the stock in 2004. It's the same price that it is today. That's not great. I wonder if we can figure out why and what happened here. So if we look at their annual revenue, so check this out. Their revenue right now for the full year 2025, so this just ended, they did 1.68 billion in revenue. That's lower than it was in 2013, or even in 2008. So the revenue for all of eternity has been over 1.8 billion, but now it's just seen a massive decline. They only did 1.68 billion in revenue. So it's kind of the slow bleed out of the revenue. So this is starting to explain why the stock is the same price that it was in 2008, because the revenue is lower than it was in 2008, and they're not even making anywhere around the same EPS or revenue as they were back then. So it's usually the financials that explain why a stock is either doing good or bad. And I just be careful with this one. Looks like they are fixing their bottom line. Like look at these year-over-year comps to the net income. Like they're losing a lot less net income, and they're finally actually sometimes net income positive, which is great news. What's the forward multiple though? The forward PE is a 9, so a 9 forward PE, but we can also kind of see why they're trading at such a low PE ratio because the growth is kind of gone on the top line, the sales, the lifeblood of the company. So I don't really think this one does deserve a high PE ratio, but it's kind of probably fairly valued at their current price. At a 9 forward PE, that's probably fair for a company like this. And it might be like close to the bottom. Who knows? The risk reward might look decent on that one. That's kind of like not the growth doesn't look great there. What app are you using? Yeah, hey, what up, Legumes? Hey, this is actually a brokerage right here where you buy stocks on. If you want to get it, it's in the link tree in my bio. Very first link there, a brokerage called Moomoo. It is an affiliate link, so if you go and deposit $100, you'll both get some free stocks. But you don't even have to deposit money. You can just use it to analyze stocks. Very first link in the link tree in my bio there. But let's look at Spotify right here. I love Spotify, but they're kind of being out innovated right now. I actually switched over to Apple. Actually, I used to pay for Spotify. Then I switched to Apple Music, but now I use YouTube Music. I kid you not. I almost want to pull up my YouTube Music app, but I'd be too embarrassed to show you what I listen to. They have copied Spotify's platform in a way that's better than Spotify because it has more stuff you can listen to. So my YouTube Premium subscription, I pay for YouTube Premium, includes YouTube Music, and it literally can play any YouTube video. Anywho, Spotify also doesn't even own their music. Universal Music Group actually owns the music, and they actually have to pay royalties back on every thing play. But anyway, Spotify makes money on their subscriptions. Here's their premium subscribers. They have 281 million premium subscribers paying for their music, up from 252 million. So really nice growth on their premium subscribers. We can see there's 446 million ad-supported users. So people who aren't paying for their subscription, they got 446 million ad-supported users. But yeah, premium revenue is 90% of their business. And check that out. It's up 14% year over year, after grew 19, after grew 15. So that just hits a new record every year, every quarter. And they finally fixed the bottom line. They had a little one-time adjustment right here. So let's go to the operating profit. This is basically just the before tax number that excludes that one-time tax adjustment they had. The core business is the most profitable it's ever been. They made 600 mil in net income this quarter, 400 mil, 500 mil, super profitable. But even after this, they're still really expensive. The forward PE is a 39. That actually makes Netflix look pretty attractive. Netflix is at a 28 forward PE, and they're the same similar kind of subscription model company. And actually, I think in the long run, I trust Netflix's subscription business in the long run more than Spotify, as music is kind of just so commoditized now. But at Spotify, that doesn't matter. Their premium subscribers are still growing. The profits are growing like crazy. They're deleveraging their balance sheet. The free cash flow they make is just immense. They literally are making $1 billion, nearly, a free cash flow a quarter. And looks like down here, Spotify announces $10 billion podcast investment. So it's like they're looking to expand, and I monetize that or something. So anyway, pretty interesting there for Spotify. And even on this little dip right here, they're not super cheap. So I'd be careful there. Mike said TKO stock. So this is actually a stock that's actually kind of Netflix gives them a lot of money for their licensing rights. So if you're wondering what is TKO Group, this is the perfect ticker symbol. Ticker symbol TKO owns WWE, so the World Wrestling Entertainment, and also the UFC. So they own the UFC, the WWE, so the perfect ticker symbol TKO, and they literally collect high margin royalties from people like Netflix wanting to license the rights. And I kid you not, this is why this stock is legit probably going to go higher, believe it or not. The forward PE is a 22. That's super fair. If we go to the EPS projections, it's supposed to be $1.58 in 2 quarters. That's literally going to be a record revenue, record net income, and EBIT. So the fundamentals are just up and to the right, and they're now starting to really make good, a couple $100 million net income a quarter. So TKO is actually a really interesting one that only is at a 22 forward PE. I wouldn't be shocked to see that one like that. Honestly, that could climb up to a 25 forward PE and go back to all-time highs. Yeah, I'm sub bro. I love this. Hey, thanks so much, Juan. Can you show me the apps again? Yeah, so all the apps, I got Moomoo, Weeble, and Robinhood. All 3 of these apps are brokerages where you buy stocks on. So Robinhood's really simple platform. You can get a Roth IRA. All these apps I'm using are all in the link tree in my bio. You can just type it into App Store though. Just type into App Store Robinhood. This one's Weeble. This one's Moomoo. But yeah, I love all these apps. So we'll look at 1 or 2 more here. Dang, we've been live for 3 hours now. I got college tomorrow for the first time in a couple months or 2 months. tomorrow shouldn't be fun. So let's look at one more stock here. LAC. Okay, LAC. What up, XKR? So LAC stock. This is your lithium place. The commodity price of lithium has not done too well, and that really this stock here, LAC, just follows the commodity price of lithium. But recently there's been a spike up as this has kind of turned into a rare earth mineral play because the US is no longer sourcing our rare earth minerals from China. We're trying to bring it back to the US, and Lithium America, I believe, is in either Canada or the US, but they have a nice lithium mine. And I think the government was considering taking a 10% stake in Lithium Americas, but then they didn't. Around this time, it was this day right here, China made it super hard for US companies. You had to go through this extra crazy permitting process to get any sort of rare earth minerals from China. Just out of nowhere, they announced it. And in response, the government's like, okay, we're taking stakes in MP Materials, USA Rare Earth, and I don't know if Lithium America was one that got on that list. But yeah, they still are a revenue list startup. I would be careful. The revenue says no data because still they've never sold anything, not a product or a service. And check out the sad leverage of their balance sheet. The liabilities went from 5% to 38% liabilities because they just lost 200 million net income, and that's why the liabilities perfectly went up by 200 million this quarter. So I'd be careful with that. They're investing actually a lot into the future. Whoa, wait, General Motors? Hey, ticker symbol GM, General Motors, the car company, actually is the largest shareholder here. Anyway, I'd be careful with that one. That one seems more of like a swing trade for the rare earth mineral play. Yeah. What time frame should I use? I just use the daily chart, daily candles. I really like them. So, or I guess we can do last one, SanDisk here, just because I know the memory shortage is so popular right now. Here's the crazy part about SanDisk. It's the best performing stock in the S&P 500. They're at an all-time high on Friday. And here's the crazy part of why this stock might continue to just hit higher and higher new all-time highs. Because check out the forward PE on this company. It's a 22. Even though the stock is at all-time highs, the forward PE is a 22. That's cheaper valuation than Nvidia. You know what I mean? That's because literally this memory shortage is going to make them so much money. So look at their EBITDA, basically simple metric, the earnings before interest. Last 2 quarters ago was $2 million. It's going to go from literally $2 million of profits to $740 million. We can look at this on the EPS as well. The EPS this quarter was a record 75 cents. It's never been higher than 75 cents before, I don't believe. Yeah, 75 cents. And then just next quarter, it's going to be $3 and then $3.50. So if you kind of annualize that, that's going to be like $13 of EPS, and it's a $377 stock. It's actually going to be even more than that. So that's kind of easy math here. You just do 377. Let's divide it by 14, be a bit more generous there. Mine, 27 forward PE. On pretty achievable numbers. So that's why I think there could still potentially be upside. Obviously, I probably wouldn't buy it. I really would. The risk reward of buying it at its current price really is tough. You almost shouldn't. But because if the memory shortage suddenly goes away or corrects itself, who knows? But that the numbers are right, and they're probably going to beat those numbers because the issue's only gone worse. SanDisk, that forward PE, that kind of is why they might just continue to climb higher. So yeah, let me end this off with a quick portfolio update. Hey, thanks, Mike Murphy says, you are the man. I really appreciate you. Hope you guys are having a great Sunday. I'm going to go and end the stream here, but let me give you a quick portfolio update. So here's my Moomoo portfolio. It's known as our buy and never sell account, where once we buy a stock in here, we just never sell it. If I trim a stock, I have to fully sell out of it, and I've made no changes. You can go to my streams from a year ago. I've owned all these exact same stocks, and it's the reason we're doing so good. Over the past year, we're up 95% in this portfolio. That's because we bought the dip and we didn't sell before today. We let our winners win. So it's actually specifically like Comfort Systems. We bought all of our shares down here in March, April, and now the stock has just tripled or up 170%. Same with Amphenol. We bought this one during the April dip, and it's just been up and to the right ever since. So, well, I guess that doesn't want to load. Anyway, yeah, and actually this brokerage is telling me there's a little formation form in there. So yeah, actually one of our newer dollar cost averages, we're buying more Coca-Cola Consolidated. This is the Coca-Cola bottling company. They do massive share buybacks. Ferrari's one we've kind of been dollar cost averaging. I've been buying fractional shares of Ferrari. We just bought 0.1 shares of them here. Out of all, you look at any car company, Ford, even Tesla, GM, they're lucky to have a 4 to 5 sometimes like you can get like a 9% net margin, but Ferrari has a 22% net margin. If there's inflation, tariff fears, the Ferrari consumer, the Ferrari customer is the one that can afford a price increase on the car. So it's kind of like a pricing power consumer play. So anyway, here's Weeble. Here's our open profit and loss. We're only up 19% all time in here. Definitely underperformed. We got some popular names in here like AMD, Disney, Reddit, Progressive Insurance, AbbVie, Sprouts Farmers Market's been a disappointment, SoFi, Robinhood, Iron Mountain. So yeah, that's kind of our Weeble risk on portfolio. I kind of just do whatever I want there. Sometimes I'll trade and who knows. But yeah, then and finally we have our dividend only portfolio where every stock in here pays a dividend. We hit an all-time high last Friday, just like the S&P 500 did. We're already up 44% year to date, 18% the past year. But yeah, these are all the stocks that we own in here, and here's my total percent change. Luckily, we are green on every single stock in here, so that's good. We also have a Roth IRA. A Roth IRA is just a tax-free retirement account, and these are all the stocks that I've chosen to own in here. You've been streaming for most of the day today. Exactly. We've been streaming for 6 hours today. So, hey, if you wanted to support me, of course, I sell absolutely nothing. Just hit the like button on the stream and subscribe to my YouTube channel. That's the only way to support me. If you wanted to subscribe to my YouTube channel, it's called Nathan Robert. You can just type it into YouTube, Nathan Robert, and watch stream on the replay. If you wanted to, the stream will be up forever. So, yeah, if you want to hit the follow button, we stream every Sunday this exact same time. Sundays are when we stream the most. I normally don't ever stream for 6 hours, but on Sundays, I usually do 2 3-hour streams. One at 8 p.m. and one earlier in the day. But yeah, we're going to be streaming tomorrow, and we try to stream every single day, at least once a day for 2 to 3 hours, sometimes twice a day if I'm extra free. So yeah, see you soon. Please sub to my YouTube channel. It's called Nathan Robert, link to in my bio, and have a great trading week, or actually just diamond hold. Hopefully we get some good, we're kind of red in the pre-market, but we should turn green next week. Thank you to everyone on the YouTube stream. Truth Sugar, I didn't even see you, man. My bad. I just kind of in the stream there. And Juan, my bad for not getting to Sundial or SNDL. I don't know what that ticker is. But see you, Mike, 6-star. And thank you to everyone who donated. I can't believe that we had Cruz in here with the $4.99 super chat, and Aaron also for the super chat. And we got Louise E. There's no way he's still in here because he did this in the first like 10 minutes. But Louise became a member on the YouTube stream. Thank you. Anyway, see you soon. I'm about to post a YouTube video tomorrow. I think you'll like it. Stay tuned for that, and hit the like button if you haven't already. Good night. See you, Lance. Oh, I didn't even see that. But all your gains in that dividend portfolio seem to come from growth rather than dividends. Do you drip the dividends? Yeah, so you're right. Most of these, good notice, most of these dividend stocks are dividend growth companies where, yeah, most of the appreciation and most of the gains come from stock price appreciation because, yeah, Meta, Google, CG, they all have really low dividend yields, but they make up for it in stock price appreciation. But the goal is in 5 to 10 years from now, my yield on cost will be crazy because these stocks like Google, Meta can afford to 3 to 4x their dividend. They can become a realty income. They can afford to have a literally 3 to 5% dividend yield. They just choose not to. Instead, they choose to do buybacks, invest in the future, buy new companies, buy Nvidia chips to invest in the future, all without having to dilute you or issue shares or issue debt, because that's what the companies do with high dividend payout ratios like UPS, Verizon. They have to issue shares, issue debt if they want to pursue an opportunity. But companies like Google, Meta, they can just all self-invest and self-fund themselves. So yeah, these are like dividend growth companies. Anyway, sorry for the